Marachi, is this? A very good morning, distinguished ladies and gentlemen. Your Excellencies, distinguished ladies and gentlemen, we welcome you to these interesting times, and we're having a very, very unique summit today. This is the Seplat Energy Summit 2020. We welcome you joining us from every part of the world where you are calling in from. My name is Richmond Osuji. Seplat as a company in just 10 years has shown us that they are building a legacy company that certainly will outlive those of us in this present generation. And I like to say that companies like this come along in every generation, and Nigerians and Africans are proud of the accomplishments of this great company, Seplat Petroleum Development Company. In celebrating or commemorating this 10-year anniversary, a summit, an energy summit, is launched here today. And the theme of our conference, we're looking at business sustainability and strategic leadership in Africa. Two things that Seplat has done so well since its inception: sustainability and providing great leadership. To get us started this morning, I want to ask you, wherever you're dialing in from, to please honor our fatherland, Nigeria, as we take the national anthem of Nigeria. Thank you very much. God bless the Federal Republic of Nigeria. Of course, a lot of our speakers are joining us virtually via Zoom. One of them is Honorable Minister of State for Petroleum Resources, whom you would listen to later. But for now, it is indeed known that a great company is born from great visionary leadership. And Seplat is not lacking in that department either. I am delighted this morning to introduce to you our first speaker, who has led as chairman since the inception of this company and has done so very well with the board and management. Please welcome to your virtual screens and stage, Dr. ABC Ojako, Chairman, Seplat.
Your Excellency, Chief Timmy Press Silva, the Honorable Minister of State Petroleum, and the special guest of honor to the Seplat Energy Summit, Malam Melem Kiari, the Group Managing Director of the NNPC, and indeed our senior partner in the NNPC joint venture with Seplat, our distinguished shareholders, and all the investing community of Seplat, distinguished members of staff and management of Seplat, whose salute I'll have to use Mr. Austin Avuru and Mr. Roger Brown as a reference point. It is my great pleasure and with great excitement and delight, I'm happy to welcome you to the inaugural summit of Seplat's themed Business Sustainability and Strategic Leadership in Africa. This is the very first summit through which Seplat intends to add our voice to the business community globally, but more particularly, it is the time for Seplat to audaciously participate and contribute our voice towards the climate change narrative, towards the ESG initiative in the business world. It's going to herald the annual summit that we'll be having, as well as mark the 10th anniversary of Seplat's operations. It will also be an occasion for us to usher in the handing over of baton from Austin Avuru, our retiring CEO, to our incoming CEO, Mr. Roger Brown. About this time, 10 years ago, in the boardroom of Shell, Seplat did the signing ceremony with Shell, Total, and Eni for the takeover of operations of 3 OMLs, which we pioneered its acquisition. And contemporaneously, Seplat staff were at the fields, taking over very complex and technically challenging operation in the Niger Delta. I'm happy to say that today, Seplat is celebrating the success we've made from that takeover, and obviously transformed the landscape for the indigenous operation in the upstream oil and gas business in Nigeria. Over the past 10 years, Seplat has witnessed a series of successes, starting from growth of our production, growth of our reserves, being indeed the very first and only company that has taken securities to both the London Stock Exchange and the Nigerian Stock Exchange. This was the biggest sub-Saharan Africa IPO ever at that time. Seplat will continue to be a trailblazer, and as the business environment changes, we are also a very strongly innovating company and continuously doing so. So today you will also be hearing how Seplat, growing gas business, will become a very audacious first step towards making sure that our operations are aligned with the climate change narrative, the ESG initiative in the business environment, and it will indeed be our main contribution towards the carbon neutral operation in the energy value chain. Over the years, Seplat has been known and well respected for the roles we have played in stakeholder management. Mr. Avuru, having led this company successfully, will be handing over to yet another well-tested hand who has been with the company as a CFO for 7 years, Mr. Roger Brown. We will also be witnessing a session that will be chaired by Mr. Basil Omiyi, CON, as we tell the Seplat story. It is my honor and privilege to welcome you to the inaugural summit of Seplat. I know that you have had to leave very many other commitments to be with us today, despite the very unprecedented time of the COVID-19 pandemic. I wish you a very wonderful summit, and I look forward to having you on an annual basis. And I wish you well, keep safe, and God bless you. I now will yield the stage as I call in the Honorable Minister of State Petroleum to declare the summit open.
The chairman and members of the Seplat Energy Summit 2020 MDs, CEOs, COOs, industry leaders, outgoing CEO of Seplat, distinguished participants. It is indeed a great honor to be invited as a special guest at Seplat Energy Summit 2020, themed Business Sustainability and Strategic Leadership in Africa. And I congratulate the leadership and entire staff of Seplat as this auspicious event marks Seplat's 10th anniversary of phenomenal achievements and remarkable successes in the Nigerian oil and gas sector. It is worthy to note here that Seplat was awarded some divested assets based on the federal government's aspiration to develop indigenous capacity in the Nigerian oil and gas sector about 10 years ago. And over the past 10 years, Seplat has recorded achievements, monumental achievements, and have grown to become a leading independent upstream oil and gas company in Nigeria. Seplat has recorded some key achievements in 10 years. One is successful acquisition of SPDC and CNL divestment assets and appointment as operator. Operated 9 drilling rigs, 2 swamp drilling barges, and 7 land drilling rigs, and attained peak activity of 8 drilling rigs concurrently in 2014, highest in the industry in Africa by an operator at the time. They also increased daily crude oil production from approximately 14,000 barrels in 2010 to the current level of about 60,000 barrels within the first 3 years, and sustained the average production. Seplat also increased open gas and processing capacity from 90 million scf to 465 million scf. Seplat is today a leading gas supplier to the domestic gas market with about 350 million scf supplied to the domestic market daily. This has contributed to the growth in the nation's power generation capacity and supports the government's diversification agenda. Seplat is currently operating and managing 3 flow stations and have achieved quite a bit. These achievements are commendable and needs to be emulated by other indigenous oil and gas companies. At this juncture, permit me to discuss this year's theme under 4 headings. The global impact of COVID-19 pandemic on the oil and gas industry, COVID-19 and Nigerian oil and gas industry, strategies to sustain the Nigerian oil and gas industry, business sustainability, and finally, diversification. By 2020, the year of gas. The COVID-19 pandemic has indeed taken on the global oil and gas industry with cascading impacts to other sectors. It is not only a health crisis, it is both an economic and security threat to nations, especially when revenues from oil and gas sources cannot fund government budgets. However, it is not a death sentence, but an opportunity to see things from different perspectives and act differently. The global world economy is forecasted to decline by about 3.4% in 2020 due to the impact of the pandemic, compared to 2.9% growth globally in 2019. From OPEC analysis, global average oil demand declined by about 8.49 million barrels per day, and oil prices went down as low as $10 per barrel in April 2020 due to the economic impact of COVID-19, coupled with the fallout between Saudi Arabia and Russia on the agreed volume of crude oil supply to energy markets, which led to a global supply glut, leading to crude oil supply and demand imbalances, thus leading to a drastic drop in oil prices. Going forward, we foresee that global upstream investment will continue on the decline, and recovery is likely to come beyond 2022. In the US, total oil rig count declined significantly from 678 rigs in March 2020 to 287 rigs in June 2020. The areas impacted by the pandemic in Nigerian oil and gas sector are as follows: market and revenue instability, demand and supply imbalance. Revenue declined due to low oil prices, pressure on Nigerian crude oil selling price, the OSP, due to supply glut and lack of buyers, production uncertainties due to refineries shutdowns in major refining centers across Europe and Asia, decline in demand of crude oil due to global lockdown, investment deferment and cancellation resulting in huge losses from potential investments and associated benefits such as employment and taxes to government. Project delivery risk, reduced access to capital, and slow down progress of project execution. The huge revenue losses due to sheer drop in oil price arising from supply-demand imbalance has significantly impacted the Nigerian economy and occasioned budget deficits and delivery challenges. Our budget benchmark was revised, for example, from $57 per barrel to $27 per barrel. Project slippages, job losses in the private sector, etc. Now, what are our strategies to strengthen the oil and gas industry in Nigeria? Curtailment of crude oil price in production. Nigeria joined OPEC Plus counterparts in the historic May 1st curtailment of crude oil production to rebalance and stabilize the global market. The aim of the production cut is already being met as oil prices have rebounded from its 2020 lowest point of $10 per barrel to the current price of $43 per barrel as at 23rd May 2020, and still appreciated, though conditioned on the compliance level of OPEC member countries. Nigeria is expected to comply with an OPEC quota of 1,412,000 barrels of crude oil per day for the months of May, June, and July 2020. The second strategy is emplacement of industry-wide cost curtailment measures. Aggressive capital allocation to priority projects with low cost of production. Achieve unit operating cost of $10 per barrel without jeopardizing growth. Through the Nigerian National Petroleum Corporation, we have rolled out strategies to achieve $10 per barrel unit operating cost. To ensure cost discipline, including downward renegotiation of all contracts and other business obligations. Renegotiate contract to achieve minimum 30% cost reduction. Our fourth strategy is to diversify. That is we started by declaring Nigeria, the year 2020 as the year of gas in Nigeria. The diversification of portfolio to non-oil businesses to cushion the effect of future crash in crude oil prices. We have declared this year 2020 as the year of gas and have commenced the National Gas Expansion Program. On 16th January 2020, we inaugurated an interagency committee saddled with the responsibility of coordinating our concerted efforts to ensure the penetration of domestic utilization of LPG, encourage auto LPG, CNG, and LNG for the domestic market. This will drastically reduce the massive outflow of the nation's foreign exchange currently being experienced in the importation of PMS. As you are all aware, the nation has enormous natural gas reserves of about 203 TCF, and when efficiently utilized and monetized, it will enable significant growth in power generation across the country in order to meet the substantial energy deficit, and will provide significant contribution to the overall economic development of the country through emergence of a wide range of industrial clusters around fertilizer, petrochemical, manufacturing, and agribusiness, among others, thereby creating lots of jobs among our teeming and growing population. To conclude, I hereby wish to once again congratulate the leadership and the entire staff of Seplat for this event. And once again, thank you for the honor and opportunity afforded me to open this summit. I wish us all a successful deliberation. Thank you, and Baraka de Sala. I hereby declare this summit open.
Thank you so much. Thank you so much, Honorable Minister of State Petroleum Resources. And I'm sure those of you who are joining us virtually are appreciating the Honorable Minister with a warm applause. Thank you very much. Okay, continuing now without wasting much of our time, the Honorable Minister has declared open this summit. Just a quick breakdown. I mean, we have 4 speakers today, 3 moderators, and 14 panelists, experts, to do justice to all that we'll be discussing today. We'll begin with our keynote discussion session, where we have 3 of our panelists and a moderator. And I will begin real quick now with welcoming our panelists who are joining us online, all of whom are joining us online. I want to begin with our first discussant for this session. Now remember, they are discussing the theme of the conference. Joining us live via Zoom, I want to welcome the Chairman CSR Committee, Seplat Board, and former United Kingdom Minister of State for Africa, Asia, and the United Nations. You can just go to the website energysummit.com, and you see the resume or the bio of all of our speakers, quite detailed there. So I want to welcome Lord Mark Malloch Brown. He's our first discussant. Joining him on the panel as well is another discussant, and this time from the continent of Africa here, the President and Chairman of the Board of Directors, African Export-Import Bank, Professor Benedict Orama. And joining them as well is the Managing Director and Vice Chairman, Global Co-Head, Sustainability and Corporate Transitions, Citigroup Global Markets, Keith Tufley. And moderating this session for us is a presenter with the BBC World News Television out of Johannesburg this morning, Lerato Mbele. Lerato, I yield this digital stage to you now.
Thank you very much. And thank you very much to Seplat for the very kind and generous invitation for us to participate in this milestone event. It's a company we've observed and studied, and we know it is a real trailblazer for multinational African corporates. It's a timely conversation we're having about strategic leadership and business sustainability as the world slowly reopens and reemerges from COVID-19 and the ensuing lockdowns. To power up economies, we're going to need energy, we're going to need electricity. But we are in a world where we're talking about circular economies, where citizens, the environment, and the economy must grow together, and there should be accountability and transparency in investments. The good news, according to Africa Business Magazine, is that since the year 2017, about 41 African countries have started to receive or allow bids in the renewable energy space. Unfortunately, Africa still has less than 2% of global market share in renewable energy, and so there's huge potential and opportunity for more. But in order to receive those investments and in order to transform our economies to be more energy efficient, we need leaders that think outside the box, strategic leadership, and we need leaders who respond to the needs of the people and the environment. That's the sustainability aspect. And so today, our illustrious panel, as introduced, is going to share their thoughts, their experiences about how we can really move forward on this question of strategic leadership, accountability, and sustainability. Without further ado, may I ask Lord Mark Malloch-Brown, respected international diplomat and chair of CSR on the Seplat board, to just give us your opening remarks on how we can achieve more and greater strategic leadership and sustainability.
Well, Lorato, thank you, and thanks to the Honourable Minister for his wonderful opening keynote, and greetings to all our guests. I think African energy is caught in two overlapping revolutions. One is that it is shifting from being a supplier to the global markets to a supplier to a Pan-African regional market. And that is driven by issues of cost, location, risk, etc. And I'll come back to that. And the second revolution is a dramatic potential change in the energy mix as we shift from fossil fuels to renewables. Now, let me take the two in turn. First, the global shift to a regional supplier. As the Honourable Minister outlined, we are currently in an energy crisis of reduced global demand, of very low energy prices. And that's making investors treat quite a few traditional suppliers to that global market increasingly as marginal ones. And issues of geography and access to those parts of the global energy market which will continue to grow become key. So, for example, Asia will continue to consume more oil and more gas. But Middle East suppliers as well as Asian suppliers will have an advantage in terms of location. At the same time, the traditional energy markets of Europe and the US are shifting away from their reliance on petrol, and where they're not, in the case of America, they're through fracking, finding their own substitutes and alternatives. So, at one level, you might say that the prospect for African energy is quite bleak, or energy production. And a lot of countries where there was exploration a few short years ago in the African continent see that exploration now stalled. There isn't the capex for it. But if you look at Africa's own energy needs, you see just how huge and growing they are. Half the extra population in the world between now and 2040 will be African. 500 million people will move to cities in Africa over that same period, a much faster rate of urbanization than, for example, in China. And you look across all sectors from oil to gas, and you see that Africa is right up there as one of the most dynamic growing markets for that. You look at electricity, where the continent lags horribly, both in access to electricity in terms of hundreds of millions who don't have it, but needs, particularly in the new urban centers for cooling, etc. So there'll be huge growth. And what the suppliers and countries that supply need to do is pivot from these global markets to the African market. And hence to my second and final point about my second revolution about renewables. Only 1% of global solar is currently in Africa. And yet, like with wind and hydro, Africa has some of the most important potential renewable assets in the world. And I think for reasons that we'll discuss more in the session, you're going to see the energy mix in Africa shift. Gas, particularly for domestic markets, is going to come up. We're seeing it, and the minister commented on it in terms of what Seplat is doing in Nigeria. Oil will stabilize and grow less rapidly, but renewables are going to come on board as a critical part of the electricity provision for a continent which has huge unmet and growing demand. Let me stop there, Lorato. Thank you.
Thank you very much for sharing your insights, Lord Mark Malloch-Brown, and thank you for reminding us that Beyond the fossil fuels, Africa is also at an advantage to harness so many of the natural resources around us, the sun, wind, geothermal energy as well. But many would say what's really needed in order to cultivate that is the right investments in the infrastructure that will harness some of these investments. And I think this is why something like the Africa Continental Free Trade Agreement and the setting up of the infrastructure for Pan-African trade might be useful in helping to unlock some of this potential. And so to that point, Professor Benedict Orama, President of the Afrexim Bank, please share your thoughts as to what can be done multilaterally, particularly as we are on the precipice of this continental free trade area.
Yeah, thank you very much, Larato. I don't know, my video is refusing to come on.
We can hear you clearly.
Okay, I think
so
it's on
proceed.
now. Yeah, thank you very much. Let me first of all thank the Honorable Minister for the wonderful speech he just made, and also to the chair of the board of Seplat, Dr. Ojako, for inviting me, and also all the members of the board and management of Seplat. I feel really highly honored to be here because we were part of the origins of Seplat. Afrexim Bank provided the initial funding that made it possible for Seplat to implement the transaction that Dr. Jacob spoke about when he was presenting the origins of Seplat. So let me take the opportunity to wish Seplat a very happy 10th anniversary and many, many more 10th anniversaries. Anniversaries for the future. Loretta, you are right, and I think Lord Mallock touched a bit on what I wanted to say. The future for the continent is integration. If anybody doubted it, the recent events prove it. First, we can see the growing geopolitical tensions in the world and the impact it's having on world trade. And it's just the beginning. It's likely to have even more impact on the way trade flows are restructured. The second is the pandemic we're just witnessing. The Honorable Minister spoke about how the dislocation of supply chains impacted oil flows. If you consider that Africa exports about 76% of its exports are primary materials, of which about 45% is energy, oil, and you can understand what that means for the continent. And that is why the continent is expected to contract for the first time in 25 years this year. 2 years ago, the leaders of Africa did something courageously. They launched the Africa Continental Free Trade Agreement. And within 1 year, it received the necessary ratifications and came into force. Trading was supposed to start July 1, but it has been delayed to January because of the pandemic. So we're taking the next couple of months to complete negotiation of the rules of origin, and of course the exchange of concessions on services and also tariff concessions. The benefit of this agreement is immense and covers so many things that the continent needs. But with regard to energy, we can see that the continent today constitutes 16% of global population, but it consumes 3% of global energy. Just like many things in Africa, Africa consumes what it really does not have, and then what it has, it doesn't use. We consume about 45% of the energy we consume is from crude oil, and then we have about 6% from hydro and just about 1% from other renewables. whereas Africa has an unlimited supply of solar, about 10 tetrawatts of solar. It has 400 gigawatts of gas. It has more than 350 gigawatts of hydro. The Inga Dam on the River Congo is estimated to have the capacity to power the whole continent. The problem we have is that we do not have something that will help us break down the 84,000 kilometers of borders that divide us. And that is what the AFCFTA is doing. So we have harmonized approach, a harmonized strategy to be able to distribute energy, invest in energy in a way that is that allows consumption that is more efficient, that avoids waste. Energy pools that we have around sub-regions can be then pooled into one continental energy pool. This will change the continent. We can then begin to build regional pipelines, even for crude, which will reduce the pollution we see carrying crude from Africa to Asia to refine, and then carrying the same crude in a refined form back to Africa. This is very polluting. So the AFCFTA has huge potential to begin to change all of this. And we're looking forward to working with everybody, including energy companies like Seplat, in realizing the ambitions of that agreement. Thank you, Loretta.
All right. Thank you very much, Professor Oramo. And to introduce our next speaker, Keith Tuffley from Citigroup Global Markets. Professor Oramo says leaders were courageous 3 years ago when they decided finally to buckle down and get this Africa Continental Free Trade Area moving. The infrastructure that's needed will obviously be built, perhaps through public-private partnerships with the private sector. And so that calls on local and multinational companies on the African continent to also think about their leadership role, to perhaps consider themselves as corporate citizens. What are your thoughts?
Yes, well, thank you very much, Loretto. And first, let me say congratulations to the team. It's tremendous to be here, an honour to be here for your 10th anniversary, and thank you very much for inviting me. And congratulations for all your achievements over the last 10 years. They're very, very impressive. It's clear that you have a major role to play in the country and on the continent, and I think that opens up enormous opportunities for all of you. I'd like to first, in response to your question, Loretto, is to say and to reinforce what Mark was just saying about the revolution that we're in. And there's a series of these revolutions that we're currently facing in a very good way. I'd like to make 3 points in that regard. The first one is the revolution we're seeing with investor approach to opportunities. It's extraordinary seeing the flow of capital and the increasing interest and knowledge by major investors around the world with respect to the value, the financial value opportunities created by the sustainability revolution. There's been a significant change in the sophistication and the knowledge and the interest and the shift of capital towards more sustainable business models just in the last 18 months to 2 years. And it's partly driven by the Paris Agreement that was signed, 5 years ago. But it's also because very much there's now increasing evidence that there is a correlation and a causation between more sustainable business models and financial accretion, financial value. And that evidence is now out there in the market, and investors are picking that up. Hence the flow of capital towards businesses that demonstrate greater sustainability or the will and the commitment to become more sustainable. I'll give you a simple example of that. And we're all aware of the company Tesla, the electric vehicle manufacturer. Its market capitalization is now $270 billion. It has just made its first full year of profit, as in the last 4 quarters, the first time ever, it's actually made a profit 4 quarters in a row. Its market capitalization now exceeds the combined market capitalization of Daimler, VW, BMW, Ford, and General Motors, which is an extraordinary thing to think. But that's what investors are saying. They're prepared to back businesses that have a long-term future of financial value creation. And so I think that's one key point. The second key point I'd like to make is around the increasing focus on business transitions, that investors are increasingly recognizing the need for businesses to transition their business models. So you're an incumbent, but if we believe that we have to get to a net zero by 2050 outcome by 20 in accordance with the Paris Agreement, we want these businesses to transition to become more sustainable. And we're seeing that increasing appreciation by investors to support those businesses that are committed to transitioning. And the third thing, Loreto, is the increasing role that business has to play in leading the charge. That business is recognising they can't wait for governments to put in all the right policies, that actually business can and should lead the charge and to drive the transitions and the increasing investment and the business models of the future. And that's where I think that there's enormous opportunity for Africa as a continent to lead in that respect as well. So I'll leave it on that and hand it back to you, Loreto. Thank you again.
Thanks a lot for that, Keith. I'd like to stay with you very briefly. Could you just talk us through what are interesting models to emulate in terms of business sustainability in this new world and all this uncertainty? What are just some of the building blocks of being a relevant business, a sustainable business?
Well, I think it's the power of the example I find is always very useful, because we can all look at good examples and take ideas from those. So I'll give you a few examples where I think they've been great leaders in creating more sustainable business models. One who I think we're all familiar with is Unilever, the worldwide, the global household goods food company. They've just recently announced that they intend to to calculate and disclose the carbon footprint on all their products. That'll take them a number of years to get there, but that means they have to work out the carbon footprint throughout the entire supply chain. So right back to the farm, right back to every level of the supply chain, they have to get a system in place to create that calculation and disclose it. So we as consumers are fully, when we buy their products, we are fully cognizant of the carbon footprint that we're buying. So it leads to better decisions. Another example is back to the point about transitioning. We're all aware of Ørsted, which is the largest offshore wind operator in the world. They were once an oil and gas company, DONG, Danish oil and gas company, and they've been a great example of a successful transition. Very different business, but they've been successful at doing it. And a third example I'll use is Danone, which is again the French food and beverage company. They just recently announced their intention to calculate and disclose their carbon adjusted EPS, so the carbon adjusted earnings per share. So they've calculated an estimated carbon price for all the carbon throughout their entire supply chain, and then disclose that as part of their adjusted earnings per share. So investors can see how that improves over time, i.e. their sales and their profit and their earnings can increase, but hopefully their carbon footprint decreases. So it's a very positive measures of disclosure. So there's three very quick examples of how we can all become more sustainable and to improve our disclosures so investors and other stakeholders can make better decisions.
Thank you for that. It's very useful. Lord Mark Malloch Brown, we're hearing about how businesses can reinvent themselves. What about policymakers and their approach to business, drawing in investments, and just understanding the world around them? I'll just speak anecdotally of some investors we've spoken to in the renewable energy space, particularly wind farming, and they say, you know, by the time you deal with environmental assessments, by the time you've dealt with the regulators, by the time you've had to source the funding, it's 9 years down the line that you're talking about a renewable energy and you've got nothing on the ground to show for it.
It's a very, very good point. And frankly, in South Africa, where you are, it's really dogged the development of a renewables industry, the kind of regulatory mess around licensing and getting power contracts for renewable suppliers. And, you know, at the center of it, you have a struggling state electricity monopoly. You've got load sharing as we speak going on in South Africa. And so sort of getting it right, you know, helping the state monopoly, Eskom, transition to itself become part of the renewable solution, together with the regulatory confusion, is a problem all across the continent, but perhaps most extremely in South Africa. But behind it lies a belief amongst many regulators and government officials across the continent that somehow renewables is a kind of luxury. It's a more expensive way of getting energy, which is politically correct, but kowtowing to Western, you know, Western environmental interests. What is missing is the most important cut-through point. Renewables are cheap. renewables, the cost is sort of dropping dramatically in terms of units of energy generated. For every $1 million invested in renewables, and this is a global, not African figure, something like 7 jobs are created. Whereas in the traditional fossil fuel sectors, oil and gas, mining, coal mining, it's 1 or 2 jobs. So, this is a job-intensive industry relatively. It's a low-cost industry in terms of the energy generated. Once you've established the facility, there are almost no extra capex costs, and the opex costs are very low. So I think you're going to see breakthroughs. It's impossible for regulators to continue to block the expansion of this industry.
And Professor Oramo, just to your point, we may be speaking about greener, cleaner, affordable, renewable energy, but the fact is, Africa is rich in gas, natural gas, and oil, and many countries will still see the opportunity to leverage that. And so, at least for the near future, many African states will still be trading internationally, where there's a lot of volatility, especially caused by the unknown circumstances of the US-China trade dispute. How do businesses navigate this world where countries still have a lot of these fossil fuels to leverage?
Oh, well, thank you very much. You are right. Some of the changes that we are expecting, I'm hoping will happen, are not going to happen overnight. They're going to happen over time. And that is why policy and regulatory changes are extremely important. And that's why I mentioned earlier that the African Continental Free Trade Agreement is important. I think what Lord Malok that mentioned about the revolutions that are happening, one of them being the regionalization of trade, oil trade. If people continue to live in the past and think that the energy trading as we know it today, crude oil exports as we know it today will continue, and do not make the investments they need to make to move on to gas and to move on to cleaner energy, renewables and all that, then the market will force them to do that because they will be out of the market. So it is not about a country saying, oh, well, this is what I have, I continue to do it. Yes, that is important, they continue to do it. But if you do not start looking ahead and changing things, beginning to use opportunities you have, you're going to run into difficulties. And for Africa, I think the first step perhaps is to use the gas assets he has, to use the hydro assets he has, to use the solar energy assets he has. These are in abundant supply in the continent. What is constraining us is the investment to unleash them. The AfCFTA opens the market so that it is possible then for investors to come and look at how energy surplus economies, that is in renewable and other forms of cleaner energy, can be linked up to energy deficit economies. Even in the short term I mentioned, it is possible in the context of regionalization of oil trade for the continent to also begin to produce and sell to itself in a more efficient manner. There were discussions in the past about regional refineries. There's a big refinery that Dangote is building in Nigeria. Could supply the whole of West Africa. It's 250,000 barrels per day capacity. That is about what West Africa consumes. So we need to find a way for it to be delivered in an efficient way, so that the energy savings in the back and forth of the oil trade as we have it today in Africa can begin to change. Right. So just in summary, countries and companies need to look ahead. They have to know that the past will soon disappear. We also need to change policies. We have to leverage the opportunity that the AfCFTA offers us so that we can actually use what we have in abundance we have more renewable energy capacity than abundance than we have oil. So if we don't make those changes, we can begin to develop the continent using cleaner energy. And as we've seen from the story about Tesla and all that, perhaps the continent can actually move further ahead than others because it's able to be in front, be ahead in terms of the quality of the energy it's using to power its development. Thank you.
All right, gentlemen, I'd like us to wrap our session up before we exhaust our time. But what I'd like to do is also just refer to some of the comments that are coming through the chat forum on this webinar. Walter Olatunde says, congratulations on Seplat's 10th year blazing the trail for the energy sector in Africa. They're asking a question to Seplat. So perhaps the incoming and outgoing chief executives, when they address this webinar, they can answer this question. What is Seplat's plan to invest in solar energy over the next 10 years? That's a question from Walter Olatunde. Bernard Akinyemi says, I believe in the schools of thought that Professor Orama is speaking about. We should stop consuming what we don't want or need. And then finally, Kenneth Amaeshi poses a question which I'm now posing as a final question to all three of our panelists. So gentlemen, listen carefully. Kenneth wants to know, is sustainability just about the environment, carbon, and climate? What about addressing the social issues in Africa? Lord Mark Malloch Brown, what about the social issues?
Look, I think energy access is as critical a goal as clean energy, but renewables is a way to secure both. It produces cheaper power. It can be much more decentralized, off-grid with local grid solutions. But it is also, as we've heard from Professor Armour and others, it's not a sole solution. We're going to, in Africa, because of the exploding need, have a mix of renewables, of gas, and of petroleum. The petroleum needs to be produced more cleanly in order to protect the health of the citizens of the continent, but it's going to be that energy mix which is going to be driven by these two goals of energy for all as much as by clean energy.
Professor Orama, is sustainability just about cleaner fuel? What about the social issues?
Well, no, it goes beyond that. Of course, it goes to all the social issues that we also have. If we pursue development without thinking about people to carry everybody along, then that development will come to haunt us, so to say. If we don't feed our people, then the mass we don't feed will become what we use to bite us. So it's important we pursue other social issues, but also dealing with energy, because energy is critical. It enters everything we do in life. When we speak, we are consuming energy. Anything we do is about energy. So if we begin to do things sustainably in the energy sector, we'll probably be able to impact other forms of sustainability. So energy is at the heart of our living. And I think we can go a long way in bringing sustainability if we begin to pursue cleaner energy.
And finally, Keith, toughly, what's business's approach to the social issues? It can't just all be about value for shareholders.
No, and it's a very good question. And the answer is definitively that sustainability is much more than environment, carbon, and climate. This is why, for example, Mark, in terms of the SDGs, the Sustainable Development Goals are clear. It's an interrelationship between all of these issues, social, environmental, and governance. That's why we call it the ESG, environmental, social, and governance. They're all interconnected. We cannot achieve solve the climate challenge without at the same time achieving many of the social challenges. They're all interrelated. And by the way, it's not just climate as well. It's not just carbon and climate. It's also other environmental challenges, nature and biodiversity, the plastic pollution that we're causing in the oceans, the ongoing deforestation. They're not climate related. They're climate related, but we can solve climate, but not actually these other biodiversity and nature issues. So we have to be smart about how we address these complex interrelationships between these various components, but we can do it in a very, very smart way. I think the other thing is that the climate challenge provides the opportunity for us to make a fairer world. That's why we talk about the just transition to a net zero emissions world. It gives us the unique opportunity to create a fairer world globally and in intra companies. And so we have to take advantage of that opportunity. And by the way, COVID fast tracks all this as well. It fast tracks the opportunity for us to solve climate, solve nature and biodiversity degradation, and also create the benefits for people globally. Thank you.
Gentlemen, thank you very much for your time. You've really given the audience food for thought. I know that once I started reading the questions, others started coming fast and furiously. So I'm going to defer to other speakers, other sessions, and our more esteemed moderators to take care of some of the questions that you're raising. But we've given you something to think about, and we thank you very much for your insights, Lord Mark Malloch-Brown, Professor Benedict Orama, Mr. Keith Tuffley from Citigroup Global Markets. Thank you for talking us through the importance of strategic leadership, for showing us what it looks like, and also for reminding us that sustainability is everything. It's the business, the people, the community, the environment. Back to our MC, and thank you very much, Seplat, for giving us this platform.
Thank you so much, Lerato, and your esteemed members of panelists there. I tell you, you are getting quite a very appreciative applause from us here in the studio. Thank you, all of you. Your Excellencies, distinguished ladies and gentlemen, we're switching gears without wasting time to the very next session. And this time we are going to panel session 1. We'll be looking at the impact of the global energy transition on African economies. That will be the discourse of this panel. Joining us first on this panel live via Zoom is the Group Managing Director of the NNPC, Malam Mele Kiari. Also on the panel, joining us live via Zoom is the Executive Secretary, Nigerian Content Development and Monitoring Board, Engineer Simbi Kesie Wabote.
Which audio would you use?
On the panel as well is the co-founder and Deputy Managing Director, Falcon Corporation Limited, and the President, Nigerian Gas Association, Audrey Joe Ezebo. Now, joining us also live via Zoom is the Executive Director, Assets and New Energies for Total Nigeria, Mr. Patrick Oima. Joining us live here in the studio is the incoming Chief Executive Officer for Seplat, Mr. Roger Brown. And of course, live in the studio with us as well is our moderator for this session, who is the Chief Executive Officer of Financial Derivatives Company Limited, Bismarck Rwani. I will now yield the stage to our moderator, Bismarck Rwani. Over to you, sir.
The moderator. Right now, the GDP of Africa.
I'm not sure if I'm the only one. I can't seem to hear Bismarck at all. I think it's important to make that point. Can't seem to hear you at all.
I can't hear him too. This is Mele Kiari.
Yeah, Mele, I can't either.
Okay. Okay, let me, hold on. Don't worry, use this one.
I cannot
hear me now. Can you hear me now?
Now we can hear you, Bismarck. Maybe if you speak a bit louder, we'll hear you more.
I will.
You probably need to start all over.
This is context setting. And like I say, in Nigeria, we stand on existing protocols. What is the position of the sub-Saharan African continent as of July 2020? The continent has a combined GDP of $1.96 trillion. That is almost $2 trillion in a global economy of $85 trillion. Its growth in 2020 because of the pandemic is likely to be minus 4.1%. The population of Africa is 1.1 billion, and the population growth rate is 2.8%, while the average income per head in Africa is 1,783. Average inflation rate in Africa is 8.4%, and the life expectancy of Africans is 61.27. Another thing is that the median age of Africans is 20 years compared to the global median age of 30. Now, what does this mean in the context of the energy transition? Africa remains a free player in the global economy, but trying to grow rapidly to catch up. The population is 14% of global population of 7.8, and the global output is 2.4%. In other words, 14% of the population of the world produces 2.4% of global output. Life expectancy of 61.27, and global life expectancy 73.2. So Africans live 16% below the life expectancy of other citizens on the universe. So most African countries are oil and are Greek dependent. And if you look at the next slide shows who are the leading, in terms of GDP, the highest is Nigeria, which constitutes 17.6% of total GDP of Africa. South Africa has 14.8%, Kenya 4.7%, and Ethiopia 4.9%. The size of the economy does not mean the speed of your growth. The bigger economies in Africa are probably growing slower than the others. The fastest growing economies remain Ethiopia, Kenya, and Ivory Coast. Now, in terms of exports, the leading exporters from Africa are South Africa exports 31.2% of total exports in Africa. Nigeria follows with 28.1% of total exports in Africa. Angola next, 21%, and Ivory Coast, 1.6%. So it means that the oil, apart from South Africa, the leading exports of Africa is oil and gas. And who are the importers in Africa? Number one importer in Africa is South Africa. 40% of total imports in Africa are from South Africa, followed by Nigeria, 18.2%. Kenya, 5.7%, and Ivory Coast, 2.6%. If you look at this, you'll find that we have a balance of trade surplus, but a current account deficit. Now, what do we expect? The next slide will show you that all of the countries, especially Nigeria, is expected to contract by minus 5.4% this year, South Africa minus 8%, Kenya minus 1%, and Angola minus 1.8%. So what are the driving changes or the drivers of change? The African Continental Free Trade Agreement has been discussed by Professor Orama, but it's going to commence sometime next year. To create the world's largest single market of $1.2 billion. Before now, African trade between African countries is only 20%, while it's 60% with Asia and 40% with the European Union. So interregional trade, which is 20%, is going to increase, but not instantaneously. But it will be boosted by regional integration and agricultural development. What next? The impact of COVID, as I said, is going to be minus for the entire continent. It's going to be a negative. Real GDP growth will drop by about minus 6.9% in the worst case scenario. Inflation will actually, in 2021, will actually improve from 8.4 and to much better, about 8 point, no, it will go from 8.9 to 8.4. The balance of trade, like I said, is going up from 9.5 billion surplus to 12.2 surplus. However, the external debt becomes a major problem. The total external debt in the 5 years before 2019 was $548 billion. It's gone up to 630, and it's going to go higher than that. So there's a debt problem. However, because interest rates are low presently, you're not feeling the debt service impact yet, but it's going to come when things turn around again. So essentially, the fiscal position will deteriorate. The budget revisions, which are started by most African countries, will continue into 2021, and revenue disruptions in sub-Saharan Africa will taper investment flows. So the outlook is that external debt will continue to grow. The recovery will be slow in 2021, and it will actually affect the pace of energy transition, which we're going to talk about. Fiscal sustainability in Africa will increase and improve. They'll be positive for growth and wide acceptance of cleaner energy and renewable energy sources. So climate change will become a domestic and regional economic phenomenon and will be embraced by all. That is the snapshot as I see it. Thank you. Now, I'll call on the MD, Group Managing Director of NNPC, in the context of what we've seen, and both in the African, talking about Africa and Nigeria in particular, which is the largest oil producer. How do you see the situation, and what are the changes that you are driving in terms of policy, and what impact do you expect these changes to have on, one, output, two, compliance with OPEC quota, the growing obsolescence of oil, and how will Nigeria and Africa position itself? Thank you, Group Managing Director.
Thank you very much, Honorable Minister of State Petroleum Resources. It's a very big privilege to be on this platform, and Chairman Ojiako and the executives of Seplat. Let me add my voice to what the Honorable Minister has said about Seplat. It's one of our most efficient partners, which is reflected in the growth trajectory that they are able to attain within the last 10 years. And also on the key element of the business, which is your cost of production, is one of my most efficient producing companies, which a combination of this has made them one of our most cherished partners in this business. So I would like to congratulate you for that. Yes, of course, we all know that the cost of production in the industry today is somewhere beyond what we all will want to see, and that's why the minister referred to our target of achieving $10 per barrel production cost. Yes, Seplat may not be at that level today, but it's one of the very few companies that we know that they can achieve that within 2021. Other than that, with all the comments by our partners and other commentators, I would like to just put it on record that as we speak about Africa's sustainable economy and economic sustainability, you cannot exclude the contribution of the oil and gas industry. As we know today, the entire country, including Nigeria, is net importer of petroleum products. And that simply means that with all the resources that we have, we still import petroleum products. And beyond that, is the continent that is projected to have significant increase in consumption of petroleum in the coming years, even up to 2040. The projections of about 2.3 million barrels per day increase by 2040 is still a very, very conservative estimate. We have one of the most active populations, growth rate and projections showing that by 2040 will probably be the most populous continent in the world. And that means it's a continent of opportunity. Not only that, when you drill down further on all the data, which I don't want to talk to the specific, but Nigeria will constitute about 25% of the total population of Africa by 2040. It will constitute about 25% of total population of Africa. And in terms of growth, it will contribute about 20% of that. So you are seeing a country where the opportunities are there, where you cannot exclude petroleum and its related resources. What we can do to get this work for us first is to make our country competitive, operating environment competitive, which is part of the targets of the Honorable Minister and the government of today. First, to bring down the cost of production, and then to focus on gas. We have huge gas resources across Africa, and particularly in Nigeria, which can be harnessed to use of to empower our industries, create power, and all kinds of things that we all know are required for development. So what we as a continent can do today is to leverage on the opportunities that are there. Like Chairman Oruma has said, it's very important that we have connectivity within Africa. Connectivity in terms of economic activity, oil and gas infrastructure connectivity, which we are working on today. We are trying to see how we can have the Trans-African gas pipeline so that it can cross into Morocco and through Algeria into Morocco, and also to expand the West African gas pipeline all the way into the last country in the West African services, such that other countries can key into this. But that also can be extended across Africa. It's not the only place that we can do this. We need to bring down our borders. I agree with Chairman Oruma completely that we do need to bring down these borders so that we can develop internally. And as we do this, we must not lose sight of the fact that the world is transiting to renewable. Even that is not a challenge for us as a continent, because the best of projection have indicated that even by 2040, you still have oil and gas contributing up to 70% of the energy mix. So we don't see any big challenge worrying about that, because all we need to do is to be more competitive. We reduce our cost of production. We make our environments more competent and more competitive, and also more peaceful. And peace comes with economic activity. As we all know, many of the conflicts that we have across Africa are related to low level of economic activities, poverty, and all other related vices that come with it. So as we work to expand our economies, as we grow our middle class, as we make more people affluent, let me use the extreme word, you will see those conflicts will go down, but you can't go down without doing all this and without all the engagement that are necessary. Otherwise, Bismarck, I think we are in a position to say that Africa is the next destination of businesses. This is where the growth will come from. And of course, we have to be inclusive in our dealings so that overall this continent can prosper. For the oil and gas industry, there are two things that we have to do. First, I didn't need to overemphasize this, which the minister has referred to, which is pulling down the cost of production. There's simply no way we can sustain the current structure. Some of our assets are producing oil in the excess of $45 to the barrel. It's simply not possible in today's circumstance. It also means that probably are subsidizing the upstream. Of course, nobody subsidizes the upstream anywhere in the world. And that's what we are practically doing. But to bring down the cost, there are a number of things that has to be done. And Simbi is here. As we progress in the Nigerian content component of our businesses, we have to also look at the back of our mind that it comes as a cost. That cost has to be managed so that it doesn't impact on the overall expectation of shareholders, such that as you try to drag down the cost to $10 to the barrel, you're also adding costs from other angles. And I think there's a conversation that is going on to see how we can manage all this to make sure that as we have the ambition of bringing down our costs, we also don't lose sight of our responsibility to grow local capacity and local content in our business. Then secondly, today, unfortunately also, all our 4 refineries are down in Nigeria today. We are importing practically every petroleum product that we consume in this country. We're working to make sure that we're able to fix our refineries and get them back, and also have new initiatives like having the condensate refinery, which I'm also happy to announce that the Seplat group is also cooperating with NNPC to create a condensate, a splitter plant in the short term. And then, of course, there are other private initiatives. As we know, there are several licenses granted by Nigerian governments for people to create refineries or construct refineries. They can't do it because of the clear issue around the market structure. But happily also, we have transited out of a regulated petroleum market into a deregulated market, which means that companies can now predict what will be the refinery get price of petroleum, and they can now have the basis of investment. Banks can see visibility around recovery of cost and margin, and ultimately we'll see more activities coming up. And of course, the Dangote refinery will do everything possible. The Honorable Minister has particularly directed us that we do everything to support this refinery comes, but this will be a game changer, not for Nigeria, but for the whole of the West African subcontinent. And with a 650,000 barrels per day refinery, which can produce up to 52 million liters of gasoline, you can see that this will change the entire flow of trades on the petroleum. And then the last part of it is to create local skills. Today, with all of intention and with the best of our intention, we still have significant inflow of expatriate skills and and stuff. This is not available in our industry. It's a very global industry. You cannot have all the skills, but today you still need to work on this so that by having the local skills available, you are able to reduce costs. You're also able to create wealth in the communities where we work and in the whole broad country and the continent. And this will contribute to economic growth, bringing down the cost of production, and of course, introducing even more efficiency to our business. Lastly, I would just like to highlight that in the NNPC today, we are focused on one major thing in the industry, which is bringing down the cost. It's not at all cost. We're also not doing it so that we stipulate development and activities, but we're doing it so that where you can produce, you don't need to operate it. And that's the basic principle of this business. Companies shut down when they know that they can't produce. You can't produce $60 oil and accept that will continue to be sustained. Somebody has to subsidize this, and there's really no room for such subsidy. And we also have to deal with issues around expectations of our shareholders. Our target is to hit a production of 3 million barrels per day. This is within sight. I can share with you that in April, in a particular day, we're able to achieve 2.45 million barrels of production per day without doing much work, but with just some discipline and with cutting costs and then also some level of efficiency. And this we didn't do in the last 10 years, but this means that the 3 million barrels per day production is realizable, is within sight. There are so many projects that are lined up, incremental projects that will ensure that this target is reached. As we do this also, we're also looking at the markets. Would the market take all this as our contribution to the overall pool of production across the globe? We are committed to the OPEC cut because it is needless to produce $20 or $30 oil and sell it at $10. Nobody wants that. It's in the best interest of the industry to align and cooperate so that we can manage those costs. But it doesn't stifle growth. We have a line of sight around when we can shoot up those production. And we're managing all this by increasing more condensate production from our assets because they're exempt from the OPEC cut, and also managing the growth in the oil. And I know the Honorable Minister is working on a process where we can move away from our current threshold of possibilities of crude oil production to a higher number. And that will materialize by the time some of these productions come on stream. And when we do all this, ladies and gentlemen, I know that this continent will benefit from what's happening in Nigeria. Will be the driver of many of the growth that you will see from all the data that is available. It is obvious that growth in Nigeria is primary to the growth of and developing Africa. And lastly, I would like to thank, I think I'm saying this last twice, I'd like to thank Chairman Oruma for supporting us on many initiatives, providing the financing and funding, creating the cluster of opportunities for us to fund our projects, as we also look forward to other initiatives. Ladies and gentlemen, thank you very much. I think I've taken too much time, and I apologize for that.
Thank you, Group Managing Director, Madam Carey. That was very illuminating. In a summary, I think you're talking about Nigeria cannot produce where its marginal cost is higher than its marginal revenue. Cost targeting is important. And then focus on gas and completing the West African gas pipeline, and also encouraging the Dangote refinery to make Nigeria a hub for refining. Now, without much ado, I would like to go to Patrick Olema of the ED in Total. So you give us the private sector context of this before I come back to Engineer Simbi Wabote. So over to you, Patrick Olema. Can you tell us how Total is looking at this and how you key in to what the Group Managing Director of NNPC has just said? Thank you.
Okay, good morning. I think it's good afternoon now. Good afternoon, Mr. Moderator. Good afternoon, GMD and Honorable Minister and the Executive Secretary. And then thank you to Seplat Chairman Ojako and the rest of the Seplat management team for inviting us to speak at this conference. Really a privilege. Let me start quickly by saying that I think in terms of speaking on energy transition, particularly in Africa and indeed elsewhere, there are three things I think we can fairly agree on. I think the first one is that production of energy and consumption of energy contributes to global warming. I think we can fairly agree to that. Production and consumption of energy is responsible for maybe about 80%, depending on the data you refer to, of global carbon emission, and maybe 60% of greenhouse gas emission. I think we can also fairly agree on the fact that GDP wealth has a relationship with energy consumption. So the wealthier nations consume more than the poorer nations. So to that extent, Africa is a bit of a low polluter compared to some other countries. I think we can fairly agree on that. I think the other thing we can agree on is that with growth in global population projected to grow by another 2 billion by 2040, plus again, growth in GDP in quantum leaps by 2040, that will come with additional demand for energy. But on the other hand, especially as an energy sector, energy industry, we must confront the climate challenge to reduce emissions and cut it by half if we are to meet the Paris goals. That's the so-called dual energy challenge that produces its own challenge. I think if you look at those three, the way we see that we need to confront that as Total, for instance, we at Total, we take that seriously. We have been part of the Paris Arrangement and the Paris Accord. And in fact, we have incorporated a climate challenge into our strategy. And we respond in 4 key areas. First is that we're expanding our presence in the gas value chain. We believe, we are fully convinced that natural gas provides the most immediate and a pragmatic way to challenge or to reduce emissions by displacing coal in power production. If you look today, coal still has about 38% contribution as fuel to power generation across the world, and this is clearly not acceptable. Second is that we are committed to producing low carbon electricity around the world. So our commitment in 2020 is to generate about 3 gigawatts of electricity from our own gas-fired power plants, which of course in Nigeria, will come to that in a moment. The third one is that we're also committed to producing a low energy intensive products to our customers, and one key one is biofuels. We're very active in Brazil, and we've also established the first biojet refinery in La Mede in Paris, in France, where we'll be producing a biofuel for jets for aviation, which will contribute significantly to reduction of emission. And the final one is to contribute to our own quota to carbon neutrality by 2040. And we're doing that by investing massively in carbon capture, storage, and utilization, as well as natural carbon sinks. And again, if you look specifically, we are doing exactly the same in Nigeria with our partners, NNPC. We have recently launched the Train 7 project, FID, taking the FID that will take the capacity of Train 7 to Train 7 LNG plant to 30 million tons in another 3 years. And what is important to note is that the feed gas that goes into an LNG, 50%, about 50% of it is associated gas. So this is helping massively to reduce gas flaring in Nigeria. In our own operated fields upstream, we have eliminated 70% of gas flaring since 2010. And in all new projects, including our flagship Egina project, is zero flaring, as we demonstrated by launching Egina first oil in 2016. Our Katsina power plant, we are also investing. We are the only major investing in a solar plant in Nigeria. We are part of the Katsina 100 megawatts solar farm development. Today, we are still the only major involved in a downstream marketing, where we have over 500 stations we are solarizing, and we're also distributing our solar lamps and chargers for phones, which perhaps in some rural areas is the only source of sustainable energy you have. So really, our key message is that when you consider energy transition, it's going to be different as you go from region to region, depending on where you live and depending on your access to energy. If we take Africa, for instance, where with a population, as the moderator rightly stated, 1.1 billion, over 50% of that population has no access to sustainable electricity, has no access to a decent means of cooking, stay cooking with open fire with attendant health risks. The approach to energy transition will clearly be different from, say, Europe, where they take access to energy as granted. And the other message we'd like to pass is that given the population growth that we'll see in the coming years, all sources of energy, and I do repeat, all sources of energy will be required. What will be required is a significant shift from the energy mix that we have today. I think the moderator referred to that, and I think GMD also referred to that, where over 80% of the energy mix is still coming from fossil fuels. This is clearly not acceptable. Going forward, we recognize that we need all sources of energy, but it's just that we need to rejig the mix, especially by eliminating high polluters like coal. And we, as Total, we have demonstrated that by exiting our coal business in South Africa, where indeed coal still remains a big contributor, over 70% of the power generation in South Africa. So clearly our message is that this is not about pitting one energy form against the other. If you look at renewables will play a key role, as the GMD has said. But remember, some days there is no sunlight, some days there is no wind, some days there is no water. So you do need a complementarity of the other energy sources to support renewables. And our message is in line with what former UN Secretary General used to say, that lifting people out of poverty, driving economic growth, and fighting climate change are all one and the same fight. It's not one against the other. That's our approach to the energy transition, is that we'll continue to mix the energy mix in a manner that delivers the goal of delivering on growing demand, and at the same time achieving the goal of reducing emission around the world. I think I'll stop there for now.
Thank you, Audrey. Patrick. Now, we hear you. You're talking about optimality of resources and making sure that we have an optimal mix, and that it's not one against the other, it's all combined. Thank you very much. We are going to come and take you on what you're doing to help the smaller producers and the smaller operators down the value chain. Let me yield the floor to Engineer Simbi Wabote, who is in charge of the local content board. This is going to, he will have to address some questions as to this question of marginal cost and marginal revenue. If you are going to go along to assist domestic operators, are you going to be carrying along the inefficient operators, or are we going to allow the efficient operators operate? And when we now survive, then we can think of the others. And how do we make sure that the local content does not compromise competence and quality? Over to you, Engineer Simbi Kasie Wabote. Thank you.
Yeah, thank you, Bismarck. First, let me recognize the presence of the Honorable Minister of State for Petroleum Resources, who did set the scene for this discussion today, and also the GMD of NNPC. Let me congratulate Seplat for surviving to its 10th birthday. It's not easy in this shark-infested water that I used to call it. Also congratulate Chairman ABC Ojiako for having been steadfast to steer the ship to what you have today. I must say that Seplat is one of the poster childs of local content development, maybe starting to address Bismarck's point. I recall in my days in Shell, when Shell was to hand over that acreage to Seplat, the fear within the organization was if Seplat was going to stand up to the billing in order to continue to produce that asset and give Nigerians the hope that Nigerians can manage things for themselves. I also recall when it was sold, it was producing about 10,000 barrels when Shell was handling it. But today, I am happy to say that without knowing what the current figure is, I'm sure they have been able to cross the 60,000 barrels per day mark. So that shows you that Nigerian content is working, and it is the direction that every nation and every country must go. Now, coming back to the topic, let me dissect the topic into 4 parts, if you allow me. The current global energy mix, because I love data and I love statistics, the structure of African economies. The third point is the emerging energy transition. And perhaps the fourth point, with which I'll give my parting shot, is the impact of the transition. The current energy mix, a look at the global primary energy mix shows that the share of fossil fuels, that is coal, oil, and gas, is about 85% as at 2018. The share of hydro in Africa is about 6.8%, while other renewables at 4%, while nuclear stood at 4.4%. In China and in India, coal represents almost 60% of the energy mix, which they have in abundance at low cost. In the US, coal consumption has decreased considerably over the last decade due to the boom in shale gas and renewables. Specific to Africa, the energy mix is about 45% biomass, 23% oil, 16% gas, 13% coal. This is according to the data from the International Energy Agency, IEA. Renewable is at 0.02%, while the contribution of nuclear energy is negligible. Let us look at the structure of African economies. Africa is a resource-rich continent. Recent growth has been due to the growth in sales in commodities, services, and to some extent, manufacturing. African economies are largely informal, although the technology boom is driving the capture of more businesses into the formal sector. Africa's population is among the fastest growing and youngest in the world. In Nigeria alone, close to 1 million graduates are churned out of higher institutions every year. Growing urban population therefore means rapid growth in energy demand for industrial production, cooling, and mobility. Let me come to the emerging energy transition. The African continent has witnessed high number of hydrocarbon discoveries in the last 2 decades, be it Ghana, Senegal, Namibia, Mozambique, Uganda, just to mention but a few. If you take the map of Africa today and take that map, what it used to be 20 years ago, there were only a few countries that produced hydrocarbon. But today, take that map, is almost 80% of the countries in Africa. Despite the discoveries, renewable and natural gas are poised to lead Africa's energy consumption growth as the continent moves away from the traditional use of biomass that currently accounts for almost half of final energy consumption. The International Energy Agency predicts that between now and 2040, Africa will become the 3rd largest source of global gas demand growth as people make energy switch into LPG, CNG, and mini LNG. Therefore, African vast resources, renewable resources, and falling technology costs drive double-digit growth in deployment of renewables across the continent. For instance, the Honorable Minister of State for Petroleum Resources did declare last year, 2020, that 2020 will be the year of gas, backed by several initiatives such as the Nigerian Gas Expansion Program. The impact of this, on the positive side, the global energy transition represents a great opportunity for African economies to grow their GDP, improve the standard of living, and create employment. The downside is that the transition becomes so quick to the extent that we are unable to keep up with the pace and again left behind. Therefore, because of time, my parting shots, and we'll go into in-depth discussions as we continue. Energy transition is not an event, but it's important for everybody to realize that it is a continuous process. With the huge energy resource density above and below the soil of African continent, there is huge scope for transition in the quality of life for Africans. With the right policies across nations, our young population will be the driving force to short-circuit our energy transition journey. However, we do not need to journey from biomass to coal, from coal to crude oil to gas and to renewable. We can jump that transition. But I think it's also important that while we think about energy transition and the renewables, we must also think about the sustainability element, which is why I also like the discussion that went on prior to this panel session. To talk about sustainability, it goes beyond driving costs down to the lowest digit that you want to. It is over and above cost. It is about creating employment. Is it about energizing the manufacturing sector? It is about ensuring that Nigerians can take advantage of the African Free Trade Agreement when it comes alive, as opposed to using cost as a factor to subdue all these elements in order to transit to energy itself. Thank you very much, Mr. Moderator. Let me leave it for now.
Thank you, Engineer Simbi Wabote. That was very, very enlightening. I will jump over now to Audrey Jo Ezigbo, who is of Falcon Petroleum, who is joining us online. I would like you to talk a little bit about the local content and the complementarity between the locals and the IOCs and the intermediate transition companies as well. Thank you very much.
Good morning to everyone out there. So Bismarck, before I speak to the issues around the local content, I just want to say that this conversation around energy transition in Africa, it's really not an Africa problem. We've talked about the fact, for instance, that Africa holds a fifth of the world's population. It's the youngest and the fastest growing population. And given increasing mobility and globalization, indeed, if we don't get things right on the continent, we can see increasing levels of migration to other regions that then begin to impact on them as well. And as has been said, in this conversation around energy transition, we expect that because of this population growth, because of increasing urbanization, industrialization, and productivity, then we also expect to see energy demand triple across the continent, as has been projected even into 2040, about 2,306 terawatts per hour energy requirement on the continent. And if we situate this, we still see that natural gas and renewables are the highest contributors even to this demand growth. So I think it's important for us to also situate it in the context of what is happening on the continent where renewables are concerned. We are seeing significant mileage across the continent, from Nigeria to Senegal, the Tiaba and Ndiaye wind project. We're seeing Ghana's Nzema solar project. We're seeing movement in Morocco, and even in South Africa that has been largely coal has been the dominant fuel. So a lot of things are changing on the African landscape, though unfortunately, when we go into country specifics, if you look at the WEF Energy Transition Index, we are not doing well. We have only Morocco, Kenya, and Ghana who have been able to do any feature above 50% in terms of that ranking. So again, it's coming back to look at the fact that we need to build domestic demand and consumption markets in Africa. And I think this is one of the biggest things that the whole COVID experience has shown to us. We need to leverage on Africa's over 527 TCF proven natural gas reserves and use that side by side complementary to building up our renewables profile as well. So for Africa, for every nation in Africa, is the imperative to deepen the breadth of the scope of our energy resources and make sure that we're paying attention to the transition as well, even into renewables. Now, when you look at Africa particularly, you see that in terms of production, we are producing about 23 thereabouts BCF of gas, and consumption is a fraction of that, it's about half of that. And this is where we begin to see where the narrative must necessarily shift. Like I said, looking at how we deepen this. So when you begin to talk about local content, maybe we begin to speak to, Simbi should have been a better person to speak to that actually, but if we look at country specifics, whether we're looking from the East African, South African, West African, or North African region, we are literally seeing more companies coming on board in the LNG space, We are seeing a lot more public-private partnerships. We're seeing a lot of capacity building. And the examples are there, from the Mozambique LNG projects to the Equatorial Guinea Fortuna gas projects. We're seeing in Nigeria, of course, LNG 27, that's a huge Nigeria-centric project. We see also that, as Patrick mentioned, the Total Ejina project was a huge marker in terms of local content achievements for Nigeria. And of course, from the policy point of view, a lot of shifts, a lot of new policies being put in place to deepen the breadth and depth of the natural gas consumption market in Nigeria. So from the gas policy itself, the Transportation Network Code, which the minister had launched earlier, the gas flare prevention and waste pollution regulation, and so on. So we see a lot of this happening. We see even across North Africa, Egypt doing an in-country focus on capping their gas prices to make sure that the landscape becomes more attractive for private public partnerships. And in this regard, therefore, we're now talking about improvement in technology transfer, in local knowledge, in local capacity. And then the next thing that needs to happen is for us to try to address the many similar issues that constrain the investment landscape in Africa. So whether it's regulatory issues around sanctity of contract or regulatory inconsistencies, commercial issues that have to do with the market reflectivity of pricing. I mean, Africa is the continent where we have regulatory mechanisms accounting for over 50% or 57% of our gas volumes. The issues around securitization of projects in Africa, which is constraining investments. We need to be able to look at technology issues. Infrastructural challenges are one thing that you find cutting across the various regions in Africa. The technology, the pace of adaptation to new technology is also a key. But of course, as we look at this, then there's a challenge around funding. It's difficult to access funding. There's a huge forex exposure, a lot of structural illiquidity issues that you see from region to region, and we must deal with it. So just to wrap up is to say that in terms of gas, which is what I want to hone in on, that we need to, as a continent, look at gas from three broad perspectives. So there is the individual company perspective, and when you look at examples like the Seplats and the Totals, you see that they are pushing the gas agenda in terms of leveraging on gas as a transition fuel for Africa. They are pushing on that from the point of view of deepening local content, whether it's in terms of the manpower, the technology, and in-country domiciliation of various aspects of their projects. But at the same time, there is also the imperative for the country specifics. And this is where we now begin to talk about countries leveraging on policy, creating investor-friendly landscapes that can pull in the kinds of investment we need in infrastructure. And then, of course, there is then the regional perspective, where there is a need for collaborations across the region. And when GMD was speaking, he mentioned issues around the Trans-African pipeline, the West African gas pipeline expansion. And these are things that we need to see, the creation of more regional gas hubs to have a definite gas agenda for the continent. So just to conclude, I think that it's imperative that we're looking at gas as a key transition fuel that will help us to leverage on our key resources in the continent, that will help us to build capacity, that will help us to address the energy trilemma as we talk about whether it's availability, accessibility, sustainability, and at best, help us to make sure that we optimize the benefits of the African Continental Free Trade Agreement. And I'll leave it at that until we get into the Q&A segment. Thank you, Bismarck.
Yeah. Thank you, Audrey. That's very interesting. But I want to ask you, before we go to the Q&A session, a lot of people come to these conferences, these webinars, and hear all of this high sounding and promises. What they want to take away are what are the specific opportunities for me to participate in the value chain. So I would like to ask you, if you don't mind, for 1 minute, can you tell us what specific opportunities? Because in the audience, there are bankers, there are rating agencies, there are other angel investors who want to participate. What has been your experience, and what are you looking out for that will encourage you and others like you and others like Seplat to invest in this, and what do you expect from potential investors to join with you to do this, whilst bearing in mind that, one, we would have a new petroleum PIGB signed, I hope, and new fiscal terms and a package of incentives to encourage investment. Investment is just not about talk, because talk is cheap, but what we are going to do specifics. Thank you. Can you give us 1 minute of your time?
All right, thank you very much. Again, because the natural gas sector is very broad. However, the gap in infrastructure cuts across board. So whether we're looking at upstream exploration and production, there are opportunities there. Every time we discuss gas in Nigeria, we are actually largely focused on associated gas. And this is because, naturally, it's the way the industry evolved out of our oil exploration activities. But when you look at our reserves, you see that we actually have another 600 TCF of reserves that are untapped. And we need to pull in investors specifically into that exploration space for NAG. Okay, that way it removes the impact of the vagaries of the oil sector from the gas sector. So there's an importance for us to focus on that. Now, secondly, a huge constraint that we have is in terms of the midstream infrastructure. All right, so we need to see more people coming into midstream, whether it is by way of the pipelines themselves, or as I believe it was when Simbi was speaking, he made reference to the compressed natural gas opportunities, mini LNG solutions. So the point is looking at virtual pipeline solutions that can help us to take gas across the country and of course across the region. So there is need for that as well. Now, even on the downstream side, people need to be looking at the enablers for various what I call the dimensions of gas, so to speak. So whether it is that we're talking about LPG, then we're talking about needing more people to come into that space in terms of cylinder manufacturing, in terms of the distribution facilities, in terms of franchising, in terms of storage capacity. Many of us know that in Nigeria today, for instance, when you talk about LPG, we have LPG being produced in Bonny and taken down to Lagos by vessel and then trucked back to other parts of it does not make any sense. So we need to see more storage facilities across the globe. Now, at the same time, what are the things that complement that? There is human capacity development. We must not lose sight of that. So whether it's from the point of view of training institutions, technology providers, and so on, there is also need to build capacity in that regard. And here again is the opportunity for cross-border exchange of ideas, exchange of competencies, exchange of technology. R&D is very critical in this regard. We cannot keep building an industry where everything is imported. So there is also need for those support institutions that help us, industries that help us to build some of the components for these projects in country. That's another opportunity. Of course, and lastly, I'll just wind up here, is to say that we need, in terms of support, enabling fiscals, that's very key. Enabling policies. If you have come out, and even as Nigerian Gas Association, we're also working with the government to try to see how we make sure that the policy direction is crisp, to make sure that it's actually attractive to investors. We need incentives, and we see some of these coming up, but some of the gas projects that we need to have in place, it's important we think about the fact that they're extremely capital intensive and usually have longer payment tenures. So things like tax holidays would be very important. Pioneer status on projects would be very important. Removing some of the regulatory bottlenecks that tend to constrain investments and just sort of add on value erosion metrics into your economics. I think these are things that we need to look at. So it's like I said, there are going to be country-specific issues, company-specific issues, and it's about that partnership that creates a win-win for both governments and investors. But it's a broad value chain. Those who want to invest in the sector, I will encourage them to reach out to the Nigerian Gas Association. We're happy to have these conversations with you and create the handshakes that you may need to give you further information as to where the opportunities are. Thank you very much, Bismarck.
Thank you very much, Audrey. I think that throws a lot more light. We go to the last speaker, but not the least, Roger Brown, the incoming Managing Director of Seplat. I would like you to talk to us about what the plans of Seplat are to take you to the next level and the higher level, but more bearing in mind what Patrick said earlier on, that there's a positive correlation between energy consumption and GDP growth, but also that there's a mismatch between what is being produced and what is being consumed. And that how we can do that will help us in achieving, to a large extent, the sustainability goals that are being talked about. How is this going to happen? What does Seplat expect from its partners? And what does Seplat expect from policy? As we are going to ask the Group Managing Director to tell us shortly what the plans are for the NNPC or NAPIMS to divest some of its interests in the joint ventures so as to create fiscal sustainability as well as social sustainability. Thank you.
Thank you, Bismarck, and good morning, everyone, or afternoon, wherever you are in the world. I'd like to start with just saying that I'm back on stage again in one of the later sessions. So given the time and we're running through here, I might leave some of the questions Bismarck raised into the later session. We can go through it then. We just make a couple of quick points to say is that in terms of transition, the world's going through an energy transition, driven by the bigger polluters in terms of CO2 in the world. And Africa finds itself not as a big polluter in the world, it's a small polluter. It's 3% of the world's CO2 emissions. And any transition, you've got to start somewhere. And Africa needs to start as a base load, okay? And it hasn't to date. If you look on the world, probably 900 million people don't have any electricity whatsoever. And 600 of that, 600 million or so are in Africa. So to put that in context, the entire population of Europe have no electricity whatsoever. So the important thing is when we go for transition, we have to start somewhere. We have to have a base load for Africa. And that base load must be sustainable. So then we can then go into other technologies and actually build out from that. And that's what I really want to talk to is ensuring that we don't lose sight of what Africa needs to do to create the minimum infrastructure it needs as a starting point. The population in Africa is the fastest growing in the world. We've heard that before. Nigeria is going to double in the next, from 200 million to 400 million in the next 30 years. That's a lot of people coming to this planet. And what are we going to tell these people coming to the planet? What is their energy going to be going forward? And this is why it's critical. So we need in Africa to create that base load. It can either be hydro, it could be, in particular in Nigeria, it's going to be gas. It's going to take time though to go from traditional energy moving into renewables and everything else. If you look at the Germany, for instance, it's probably got the most renewable grid in Europe. 40% of that is coal. So let's not forget that there is a place to play between traditional extracted resources from oil and everything else, right through to gas. We've talked a lot about gas. That's a transition fuel. In Nigeria particularly, there's enormous resources of gas, and we need to put gas in big volumes to actually then move off. If I look at the grid system in Nigeria specifically, it is a diesel generated off-grid solution. And what we need to do is create more of a gas solution. So that's what Seplat is doing. You'll hear about it later on in the other session, but Seplat is very much driving the gas agenda and looking at what renewables mean for Nigeria long term and how we can get it into the energy mix. But I'll go back to the point. As a continent, we need to build that base load from what we can build off it. In terms of what government can offer, of course, my view is, a carrot's better than a stick. So incentives are better than the penalties, but I'll leave that for the Q&A session. Thank you.
Thank you. We are almost run out of time, but I'm going to summarize a couple of the questions and direct them to the Group Managing Director of NNPC, and then also to Roger Brown and all the other speakers. So the big question here is, what is the possible timelines for the PIGB, and what do you think will the immediate impact of this be on the industry and the Nigerian economy? 2, what additional incentives or package of incentives are you putting in place to encourage initial and other investors to come in to inject more capital in this business, especially at the time when we hear that Shell, Agip, ENI, and Mobil, Exxon are actually rationalizing and moving towards the more efficient assets where they can, before they make the final investment decision. What are we going to do to change things, especially knowing that our legislation was based on the assumption of the past where price of oil was much higher than this. Finally, the question about gas consumption and utilization. There are safety issues, there are sustainability issues, there are climate change issues as well. What is being done to ensure that the transition from fossil fuels, from open cooking to using gas, and that people are going to feel safe, and that gas is going to be available, and the infrastructure that goes with it, basically the pipelines and all of that, what are in place. So I will yield the floor first and foremost to the GMD NNPC, and then I'll call on Patrick and then Roger to address these issues. Thank you.
Thank you very much, Bismarck. First of all, let me defer the question on the PIB to the Honorable Minister of State for Petroleum Resources, but I'm aware that but before the close of this year, we will be in a position to get through this legislation around the petroleum industry bill. I'm sure he will comment more on that. Let me come back to our business. You made an initial comment around divestment of interest by NNPC to enable efficiency. Our view is that it's really about the people and not about the equity. I can give you a number of examples. We have assets where we're now clearly a minority interest holder that are working. And we also have assets where we're majority shareholders, where somebody else is operating and they are doing a terrible job of it. This particularly in respect of the recent divestments that we did, the government did, or our partners did in the last 10 to 12 years. Let me just put it so that we don't confuse this. Seplat is not one of the worst ones that I'm talking about. So, Chairman, thank you very much. So it's really about the people and about the governance and the processes that are in place in these companies. For every investment, where you measure them, if they're doing well, is are you able to produce at a cost that is reasonable, that will allow you to have margin? Are you able to do it efficiently, on time, and on schedule? For many of our partners, including some of the multinational oil companies, without missing words, some of them do produce oil at prices that are completely not acceptable, and it really doesn't have anything to do with NNPC's equity in it. They're in full control of it. We have a JOA that operates this relationship. That JOA enables them to take very many decisions without even reference to us. And where they have to do it, the governance structure system is such a place that can work, and in some of them, it just didn't work. And when you come back to the indigenous oil companies, and I've made an exception of Seplat, and of course a few others, I can share with you that the highest cost of production that we have in this industry comes from companies operated by local oil companies, unfortunately, but that's the reality. And also, just to bring back this conversation around equity, NPDC is a 100% NNPC-owned company where the people issues come. Significant governance and people changes were made in the company in the last 1 year. Today, we are producing in some of the assets more efficiently than any other partner, and without missing words, across the business terrain, at the best of cost and the most efficient way. So it's about the people and about the processes. And once the partners consider have a walk around these partners, you will not be having conversation around equity. By the way, the equity NNPC holds is on behalf of government. To be completely decision of government to take it. But as a matter of efficiency, getting things done, I have no doubt that when we work with our partners to put the right governance, the right processes, and the right people in place, I'm sure that we will not be having conversation around equity. And coming to issues around deepening gas utilization in the safest manner. Gas business today is the future. I can tell you that it's the only business that didn't have much impact, even with COVID. So we know that this is the business of the future. This is where the money will come from. This is where development will come from. This is where energy transition issues, that conversation can be most effective and useful. So in terms of safety, this industry is a very, very, when it comes to standards, it's a very regulated industry, much more regulated than the liquids. So the questions around safety of either the infrastructure to deliver gas other to dispensing facilities is really taken for granted because I'm sure the director DPR may be on this platform, but I know that there are standards that are there. And of course, on a very casual note, it's one of the pipelines that banders don't go to meet. But when it comes to the lower level at the level of the bottles of connection to homes, there are significant and efficient legislation and processes that are on ground. And I'm sure we all know that the number of incidences, safety incidences in gas related are very minimal, except where bandal activities come into play. And lastly, what do we do to bring more investors into the field? Today, in the upstream, as we all know, even pre-COVID, interest to bring in more money to the upstream was diminishing for the simple reason that people have this elevated expectation about energy transitions. Oil will not be useful, and therefore companies are very wary of putting their money into it. Banks and investors are also very wary of putting it. But we know that this is not a kind of an exotic stuff. We know that people will come back, but the way to do it is for people to see that they can recover their costs, they can make margin from it as quickly as is possible. And that's what we are doing. In some of our owned assets, we have some financial and technical services agreements which enable partners to bring in their money. We share we recover your costs, we share the value that comes from the production. And this is working because we have seen so many of these assets coming up. Beyond that, even as partners, we have alternative means of bringing money into it from banks and from other private equity holders. We are talking and engaging our partners. A number of them has work and delivering value to us. So this is another platform where, in the absence of other opportunities, we get partners to come in, non-operating partners to come into your business. Thirdly, and most importantly, is having a clear fiscal framework. The Honorable Minister may wish to comment on this, but I know that oil is now found nearly everywhere in the world today. Even in our country, in the inland basins, significant discoveries are made, and oil is just found probably in the places that you will never expect to find oil. So that means competition is high. You must be competitive. You must have a competitive commercial fiscal environment for people to put their money in your country. And the PIB that will come for all intent and by design, it is to make sure that when this legislation comes, we'll have a clear fiscal framework that is very competitive, that people will see that this is a destination to put their money. Once that is firm up, which will address the past, because we do have issues around the fiscal environment, disputes that we're trying to sort out, but the overall solution is to have the fiscal framework to resolve this as we're making commercial arrangements. And those commercial arrangements are actually also working. Today, we have a number of clear understanding with some of our partners. We're waiting for the petroleum legislation to have closer so that projects can go on. And that confidence and that relationship that we have will make sure that parallel to having the legislation in place, we are making commercial arrangements that are sustainable, that are very different from what we used to do in the past. And ultimately, it will see pickup of activities as we're already seeing, even despite the COVID-19 situation. And ultimately, everybody will benefit from it, particularly our shareholders. I hope I've spoken to some of the issues. Thank you.
Thank you very much, GMD. We'll have the Honorable Minister for 1 minute tell us about the possible timelines for the new PIGB, and that this time it's going to be more action and less talk as against the previous experiences we've had. We've been on this journey for about 12, 15 years and no outcome. Mr. Minister, can you please tell us? Okay. All right. So I understand the minister has gone. So I would push this the other question about what is Seplat going to do differently in 2021 from what it was doing in the past, and how is it going to be a much more improved corporate social responsibility, improved local content development, and more than anything else, keeping its standards as in one of the most efficient local operators in Nigeria. Over to Roger Brown.
Thank you. What we're going to do is continue to do what we've been doing, but we're going to drive, along with government, the energy transition agenda and pushing hard into delivering a more rounded energy for the Nigerian population. That's going to be critical. And if you indulge me here, Bizwan, I've got three requests, please. Right, for one, to the government, please continue to support us through partnerships, through our 8 joint ventures we have, joint venture in ANO in the gas side, and give us your support in completing transactions and approvals and legislation that's very clear and understood. So it's one request for the government, one request for the external world who's listening in. We've got 2,500 people on this session. In ESG, the S is social. So the request for the global world is, you can see within Nigeria and Africa wider, a lot of inward investment is needed. There is an enormous social aspect to what we are trying to do here. So when the developed world goes carbon zero, and if you look at the UK, $60 billion a year they think it's going to cost to go carbon zero in the UK. Well, just think what $60 billion could do a year in Africa. So what I would request is inward investment into the countries with clear legislation from government. I think that is what we need. Thank you.
Our time is fast spent, and I would like to bring this session to an end. I hope everybody enjoyed themselves, and the questions were far-reaching and incisive, and there'll be key takeaways from all of us here. Thank you very much for having me. And again, once again, congratulations, Seplat, for this beautiful session. Thank you.
Thank you so much, Mr. Bismarck Rwani, and to all of our panelists for this session, panel session 1. We thank you so very much. Now, time is fast spent. We will not be wasting any more of it. I want to just say to you, keep sending in your questions to the Q&A chat room. Of course, you'll agree with me that we'll not be able to take everything. So without much ado, we go to the next session. Thank you, gentlemen. Thank you so much. Thank you. So we go to the next segment, and this, we want to tell the Seplat story. Now, Seplat's mission is to sustainably deliver profitable, diversified energy solutions through operational excellence, skilled workforce, and effective partnership. In this short video presentation of 4 minutes, we want to tell you how well Seplat has fared with this mission and the plans to take it further. Now, after this video, we would listen to 3 men who play a key role in achieving this mission: our outgoing CEO and our incoming CEO. Both gentlemen will be moderated by a member of the board of Seplat, Mr. Basil Omiyi. But first off, will be this 4 minutes video that tells you a brief story of this 10-year journey.
Back in June 2009, Ambrose Brian Chukwinuka Ojiako, an orthopedic surgeon and serial entrepreneur, co-founded Seplat with Austin Avuru, a geologist and reputable player in the oil and gas sector. Seplat was formed as a special purpose vehicle to pursue upstream oil and gas opportunities in Nigeria, and in particular, divestment opportunities arising out of the incumbent major international oil companies' portfolios.
We basically say that the successes we've had in the oil and gas industry is really anchored around the persons we've worked with, as well as the host community that we have been engaged with.
Seplat's strong local ties and commitment to the company's host communities have been intrinsically important to its success as one of Nigeria's leading indigenous oil and gas company. One of our cardinal priorities is to leave a lasting positive legacy in all Seplat's host communities. The company is therefore focused on environmental stewardship, promotion of healthcare, education, economic empowerment, capacity building, and infrastructure development with special focus on its communities. Seplat is today a leading supplier of gas to the domestic market and is committed to further increase supply to meet Nigeria's growing demand particularly in the gas-to-power sector.
From day one, our growth strategy was based on three things: to grow the current asset that we acquired, growth by acquisition, and to grow our gas business. And we have been consistent in the past 10 years.
Nigerian indigenous companies are producing at least 200,000 barrels a day of oil and condense. This is very impressive.
Seplat has over the years established mutually beneficial relationship with our partners based on transparency, respect, and higher standards of ethical conduct. These standards dictate how we operate as a business and shape our engagement with external stakeholders. Seplat's best asset is arguably our people, who have carried on the entrepreneurial and competitive zeal of the founding fathers. At Seplat, the work environment fosters high-performance standards and galvanizes the collective competencies of our people towards the achievement of company objectives. Our core values, which include teamwork, transparency, integrity, and accountability, have shaped our attitude to the mandate of optimal and sustainable value creation for shareholders and other stakeholders. The company has also been blessed by a dynamic and visionary leadership, and under the founding CEO, Mr. Austin Avuru, Seplat achieved phenomenal performance standards, a trend that is set to continue as Mr. Roger Brown takes over as Chief Executive.
When I was announced as the CEO, it was the proudest moment of my working career. A true honor, and the board, very fine board, has trusted me with such a key role, and I will embrace it and take it on. The key point for us as a company is that we are very strong in Nigeria. We're leading the indigenous space with we have 8 assets today, and we're looking to put more projects on board and really cement our place in the country as a leading energy provider.
The first 10 years of Seplat could be described as a decade of distinction. Yet, the company is not resting on its laurels, and it's resolutely and passionately committed to even greater achievements in an unwavering pursuit of excellence.
Gentlemen, welcome to this segment of the Seplat Energy Summit. In this session, I'll be having a conversation with two very distinguished gentlemen who have been with Seplat for a long time. My name is Basil Omiyi. I'm an independent non-executive director of the company for 6 years plus. So I would like to first of all to welcome Mr. Austin Avuru. Austin is the pioneer CEO and co-founder of Seplat Petroleum. And he has been working 24/7 for 10 years, getting this ship on the road. We've all just seen the short film about the progress, remarkable progress Seplat has made. So it would be interesting to hear what Austin takes about that journey. I also have another gentleman with me, Mr. Roger Brown. Roger has been CFO for the company for the past 7 years, and he's the incoming CEO. It will also be good to have him take a look back and, of course, essentially take us looking forward. So I would like to welcome Mr. Austin Avuru. Welcome. And Roger, welcome.
Thank you. Good morning.
I'd like to start with you, Austin. That's 10 years of 24/7 watching the affairs of the company, taking it from infancy to where Seplat is today. Just go back for us and just let us have a sense of the highlights of what this journey has been to you.
It's interesting, really. I mean, it's like yesterday when Dr. ABC Ojako invited me to his office after Shell had directed both of us to form an SPV for the purpose of initiating discussions about acquiring 3 blocks that we considered as one asset, OMLs 38, 41, and 4. I still remember like yesterday, driving over to Dr. BC Ojako's office to have the initial discussions. And then we coined the word Seplat from Sepcool and platform. Sounded like a joke, but here we are today from that initial meeting to all the discussions with Shell. Eventually, the discussions were fruitful with Shell, and we were invited to raise the funds, pay for the assets, and we did that successfully. Then the next hurdle was getting all the approvals. Again, all the shuttles to Abuja and back to Lagos, also led by Dr. ABC Ojako. Finally, we got the approvals, and actually on the 29th of July, the assets were handed over to us. So we usually take August 1 as our milestone date, but indeed it was actually July 29th that the assets were handed over to us by Shell, and we kicked off with those assets on production.
Very interesting journey. Tell us where Multilateral from came into the venture.
Great. So the funding. So these negotiations were arrived at $373 million cash payment for these assets. $340 million to be paid immediately, and $33 million deferred. BNP Paribas had been our advisor, and BNP Paribas also advised that they had a client that they thought would be interested in these assets and in an entry into Nigeria. And so they organized a meeting between ABC, myself, and the chairman of BNP Paribas in London. And we basically did no more than an hour presentation to him, and they were interested. And so they came in and asked for an equity stake that would interest them, not less than 20% of the asset. And since we're acquiring 45%, for them to get 20% of the asset, they needed to get 45% of the company. So that's how we ceded 45% to them, and the remaining 55% was shared between Shiba, 31%, and platform, 24%. So going into to actually close this transaction, it then became the 3 of us. So it's Moral and Prom with a 45% stake in Seplat, Shiba with a 31% stake in Seplat, and platform with a 24% stake in Seplat. And then we went in, backed heavily by Moral and Prom, put some cash on the table, and then platform and Shiba on the back of the cash on the table, 153 million. We got a bridge loan from BNP Paribas for the remaining sum of money, 187 million bridge loan plus 153 million cash from Moral and Prom. That's how we closed, and that's how we paid.
That was interesting. And then you had to take on the asset and prove that you can actually create value after investing so much.
Yes, so we took over the asset, and it was doing 17,000, 18,000 barrels a day. And every time I say the asset, those 3 blocks an asset. And we inherited the core production staff of Shell that were working these assets. So they took their last pay on the 31st of July from Shell, and we hired them in on the 1st of August as Seplat staff. And so it was very seamless. We continued with that production of 17,000 barrels a day, brought in more staff, enlarged the company within a couple of months. And in 6 months from when we took over, we had already gone from 17,000 barrels a day to 35,000 barrels a day. And so that's how we grew the production. And 3 years after that, we were already at 70,000 barrels a day and heading north.
Quite a remarkable journey.
Yes.
Roger. Of course, this journey required quite a lot of commercial decisions, big commercial decisions, according to that video we saw. Can you take us through some of those decisions, all the M&A activities that we did, and so on and so forth?
Yes. Okay. Thanks, Basil. I do want to tell one slight anecdote. It's the opposite of Austin's, where we were trying to lend them $400 million. And they turned us down, and I was leading the group at the time. And I was saying, what do you mean? Who are these gentlemen who are turning down $400 million? And I met both the chairman and Austin at the time. And pretty quickly, I understood why they were turning it down. They were very smart, savvy individuals. And that's key in trying to do this. So looking at some of the commercial decisions that were made, and this is really the success of Seplat, beyond growing the production, is our M&A activity, our commercial negotiations, discussions in place. In 2013, beyond 2010, doing the initial acquisition, we did the pillar assets. Then we acquired some assets from Chevron. In 2016, we completed that. And then we added some just recently, actually, the end of last year. And one thing I would say about the commercial positions of the company is the scrutiny that any acquisition we go under comes under. The board is very, very thorough. It looks at what the price is being paid and the value being created. And I think that's very critical, that each individual acquisition is treated differently. And of course, beyond oil, we've had a lot of gas. The acquisition from Chevron brought us in to the ANO gas development, and that's our really big flagship project that we're doing, which is in the east of developing the gas business. So Seplat really prides itself in approaching things the highest level of governance, the right level of scrutiny. See, that's the success of the business, that everyone in the company has to justify any decision we're making, and there's a right level of debate and scrutiny in doing that.
Very interesting. I think ANO is really quite a new project, because it takes us outside the EMP into the midstream gas processing business, and who knows where we are going from there. We hear from you where we are going from there. Austin, for a successful company, it really takes people. There are two groups of people I would like to probably hear both of you to talk about. Austin, if you can talk about the board, how the board has supported the growth of the business. And Roger, I would like you to talk about the Seplat staff body. Yeah, I think they're actually very excellent people, and they really impress me all the time. I'd like you to probably share your thoughts about them. Roger, Austin.
Thank you. Two things I need to quickly say. First, when I discuss with my friends ordinarily, they tell me that the Seplat board is a gold standard board that you'd like to discuss at a business school discussion. And they're right. I mean, look at the caliber and quality of people we see on the board, starting from you, Mr. Mee, the first Nigerian CEO of Shell in Nigeria, the biggest multinational in the oil and gas industry in Nigeria, to all the others, whether it's Ifweko, who was such a successful chairman of FRS, or Lord Mark, who was a British cabinet minister, or a senior independent who was a CEO of Centrica. I mean, I can go on. A 12-member board, 3 of us executive directors, 9 non-executive directors, including 6 independents, is one of the, for me, the strongest board I've ever come in contact with. And that kind of board puts you on your toes. And so what has really happened is that we've spent the last 10 years building a very strong company, the right structures, the right governance, the right policies. And I always say to Roger, now we've built a platform on which you will stand and build a business. So that really is what we've done in the past 10 years. Build a strong company. And that's a strong platform, Roger, we stand on to build a business going forward.
Yeah, Roger, you're standing on the firm, standing on the rock, they say. Now, the people, Seplat people.
Yes.
Tell me about Seplat people.
Well, the big thing at Seplat is employees have a voice at all levels, from senior management down to mid-management, down to the lower management. They're encouraged to voice their thoughts, their ideas, their plans. And I think one of Seplat's real successes has been how it's built its staff. We have 500 odd staff at the minute, and we've added more with the Eland acquisition. And our staff, it didn't start out like that. It was built organically. And when you layer in organic staff increases, staff members are then joining an already existing structure with the right level of governance, the right level of formality and everything else, the Seplat way of doing things. And I think that's been a critical success factor for us, that people who work at Seplat, they talk about Seplat very, very favorably. And I think that it's that family atmosphere in the business. People really want to work hard for Seplat and really see the successes of it. And it's critical. I think that is probably one of the biggest backbones of our success. And I'm looking forward to taking on what Austin's achieved over the years as a platform. And let's see where we can take it to in the future.
Look forward now from just a strategy point of view. Where's the business going? Where should the business be going? And where is it going? Just your first thought. I know there are going to be strategy sessions and all that, but just give us your thoughts on those things.
Okay, so the key thing is we build on what we've achieved. I think that's the most critical starting point. And I've got a really great base for this. Then we look at our business, and our business is changing quite rapidly. In fact, incredibly rapidly at the minute. 2 years ago, no one had heard of ESG. Now you can't go into one room without hearing ESG, and that's environment, social, and governance. And that's the way the world is going for us. Energy is transitioning, and we need to deliver that transition for Nigeria in a big scale. So that's the biggest change for us as a business. We have to be adaptable and flexible at absolutely every turn. And our job is to actually tell the outside world what Seplat's doing, what Nigeria is doing, how we're aligning with that, and how important growth is in country. You know, we need to get the GDP growth up in Nigeria. It's the biggest in Africa, but we want it to be a lot bigger for this very young, fast-growing and hungry population that we need to feed.
Yeah, and talking of energy transition, really monetizing gas and pushing hard on gas and really is taking us in the direction of that transition we're all looking to be very interesting few years. There's another stakeholder group I think we should talk about, Austin, the communities we work with, our landlords who have supported us all this time. Talk about them and our relationship with them.
Very good. Our relationship with our communities has been built on a strong belief by everybody in the company, from the chairman of the board down to every staff. It's been built on one strong platform, that the communities are a key stakeholder in our business. We recognize four stakeholders: the shareholders of the company, government that gives us the license to operate, staff that create the value, and then the communities that give us the freedom to operate. And we treat them as such. And so we have all implemented over these years the policy of shared value, that's what we call it. And we preach this to the point where every staff understands it. We are not doing the community a favor when we do anything in their place, whether we're hiring staff from there, or whether we're training and equipping contractors to build on their capacity. Whatever we do with them, it is based on this principle that they have a right to participate in the business we do and contribute to the value we create. And we also have a right to reward them for the job they do for us. In such a way, as we operate in their land, we create a mini economy around them. And neither of us is doing the other a favor. That's worked for us. Our relationship with our community is probably our best success story this past 10 years.
Very interesting. I must say that since I joined the board 6 odd years ago, I've always found that relationship has really been quite good, and that we have endured most of the issues in the Niger Delta that we see around our competitors, but we have somehow had a special relationship with our people. We've always gained their support. And I'm happy you said that, we are not doing them a favor. They are part of our business. And part of our job actually is to make sure that they participate in what we do. And that's the way we somehow the benefit from our presence affects the local economy, which is very important in matters like this. If we make a contribution to the Nigerian economy, then of course we make a contribution to the Nigerian people, which is really why a company exists, and we're making a contribution to Nigerian society. And I'm very proud that as a young company, we can actually list quite a number of things we have done that actually has made those contributions. I think we should all be proud. Thank you, Austin, and thank you, Roger.
Okay, so haven't thanked, and rightly so, the two gentlemen who have played key roles in bringing Seplat to this point. I'm sure you've sent in a lot of questions. I will pass it back to our moderator, Mr. Mee, who would pass the questions appropriately to our panelists. Mr. Mee, sir, it's back to you.
WhatsApp has been very busy receiving these questions. There are quite many. Just to apologize, we might not be able to take all of them at this session, but just send in to Seplat and you will get a response you want. There are first two questions that are quite similar, and I'd like to pass these ones to Roger to answer. The first one is, congratulations on your 10th anniversary. We are Seplat is blazing the trail in the energy sector in Africa. What's Seplat's plan to invest in solar energy? And there is Chimeze Mwere, who also talks about transition to clean energy. And this particular question is, he belongs to Society of Technology and Energy, and how are you going to partner with groups like that and others to actually go through this transition journey?
Okay, thank you, Basil. So first question on solar. Interestingly, it's probably almost a couple of years ago, we had an opportunity to look at a solar project with one of the major oil companies in Nigeria. And that instilled a lot of discussion at the board level of how we were going to go about doing that. And so we designed a strategy to start to look into renewable energy even 2 years ago. We've been looking at that to specifically what's relevant in Nigeria. Obviously, you've got hydro today. So, you know, a quarter of the grid today is hydro. And so there is some renewable energy there already. But then looking at the sort of technologies, solar really looks to be the technology which looks the most interesting from a renewable perspective for Nigeria. So it is absolutely something that we'll be looking as part of our strategy going forward. The key thing for us is partnerships in it. So we need to look at who best to be partnered with. And the other thing is scaling it. So what we don't want to do is do a piecemeal, step into renewable energy. We wanted to go into something that we can scale as a business and be quite meaningful. And that's what we've wanted to be through everything we've done, is within the oil side or on the gas side, is we want to be meaningful in country. We're one of the biggest gas suppliers in country. We're a material oil player. In renewable energy, we want to then obviously go into that in scale. Okay, so
I think that's interesting, because you really want to be impactful. You really want to be impactful. So I think that's important in terms of scaling. Austin, I have two other questions that are also similar. This is from Bankole. Mr. Bankole would like to know if you'll be going to the midstream and downstream refining and distribution, for example. He thinks that as contribution to society, that should interest Seplat. And a similar question from Waziri Galadima. And when you do this, how do you relate this to CSR?
Thank you. Seplat is an energy company. Our goal is to provide the energy, particularly that our domestic economy, and every time I say domestic, I'm referring to the entire West African sub-region. It's our target, to provide the energy that will build up the economies of this West African sub-region. So crude oil to be refined as products, gas to stimulate electricity generation and used by heavy industries, and now going in to look at the possibility of renewables at a scale that is not just impactful, that serves as a business. So everything we do is to provide the energy that the world needs while running it as a business. And that's what we'll continue to do. And as I said earlier, CSR, corporate social responsibility. And that's where our ESG comes in. The board of Seplat is taking ESG very, very seriously. In fact, a presentation on ESG has already been done to the board at that level. And ESG is, environment, social, and governance. And so all of that has to be integrated into the way we do business. We'll have to be profitable in what we do.
So distinguished ladies and gentlemen, thank you for your patience. We understand in these unique times we live in, we had a glitch, a network glitch, but we're back now. Thank you for your understanding and staying with us. I'll pass it back now to Mr. Mee. Sir, please continue.
So Roger, the question from Temitope Olatona. What were the challenges Seplat faced creating a whole new organization to take on these assets and the issues associated with building a company from scratch?
Thank you, Basil. Thank you for the question. You know, when you start from nothing, and there's probably a question more for Austin, but anyway, when you start from nothing, there's skepticism, there's disbelief and everything else. Can Seplat do it? And there was no path. So you have to then create the path to achieve success in terms of the first acquisition and everything we did that in terms of putting the people together, the process, the business, the right governance. When we, you know, everything we've done, infrastructure we put in place, and even up to the 2014, you know, when we started that process between the Nigerian Stock Exchange and the London Stock Exchange main board, it had never been done before. There was skepticism everywhere. There were more no's than there were yeses. And I'm glad to say we turned the no's into yeses and achieved that.
Yeah, quite a challenge. You make it sound easy, but very difficult. Thank you. Austin, there are two questions here. One is, this is from Dr. Dixon. What are we doing about reducing gas flaring? And another question from Mr. Wanzweze. He would like to know, what about the possibility of investing in crude oil refining? What's Seplat thought about those two things?
Okay. Quickly, just to end up what Roger was explaining about building a company from scratch, I would say some of the key challenges, some of the key things we needed to do and get it right. The first one was building the human resource base, hiring competent, brilliant Nigerians to run this company and this business as a team. And you know, you are doing this in an environment where the people you are looking for, the competent people you are looking for are hard to get. The people you do not want are all over the place chasing you for a job. So putting that resource base in place, putting the structure, the governance structure in place, and then weaving all of this into a culture that you then drive down the entire staff so that everybody, I always say, right from the board chairman to the lowest staff, understands all of this as a corporate culture. I think that's what we have successfully done in the past 10 years, which then brings me into gas flaring, for instance. The board and our investors hold us accountable and almost accountable to a date where there will be zero flare from our operations. In the past 10 years, we reduced flaring to just about 8% of the gas that we produce. And we are committed to eliminating the flaring entirely in the next 24 months. And we're not just saying this, we're actually putting structures in place, making investments to ensure that every molecule of gas we produce is not just utilized, actually monetized, and none is flared. And I think the final question was what we're doing about refinery.
Yes.
Now, so first of all, our business is guided by corporate strategy that is usually approved by the board. And we renew this strategy as strategy sessions every year. In the beginning, refinery and the midstream business wasn't part of our job was to produce crude oil and natural gas. We've moved a step further now into the midstream where we're processing natural gas and feeding into the domestic market. We are looking at, you had the GMD say that, we are looking at possibilities of refining the condensate we produce out of our midstream business. So yes, we're taking a look at the refining business, but the way we do business is an integrated fashion. So when we look at refining, it's about refining the crude oil that we produce and delivering products into the market and not just crude oil into the market. The same way we take our midstream business to then process the gas that we produce and then send the derivatives into the market. So yes, we keep looking at an integrated fashion in our business model.
Fantastic. But I heard the GMD talking about some midstream tire refinery project he was discussing with Seplat.
Yes.
So that's again
because the annual project we deliver some 15 from our side of it, about 15,000 barrels of condensate. And rather than put this in the pipe, the GMD NNPC has come to us to say, look, let's think about how we can refine it in situ, and those discussions are ongoing.
Yeah, that's certainly interesting. I think I'd like to apologize to our audience that there are at least 1,000 people online and about 200 from YouTube. There are many questions coming. We can't take it in the time allocated. I will just take the last question. But what I will tell you, send those questions into Seplat. I promise you, you will have an individual reply by email to your questions. So I go to the last question to Roger. This is from Stephen Wanchuku. How have you navigated the oil price depression and of course all these fluctuations in Nigerian currency?
Yeah. Good question. So, obviously Q2 this year, we had the lowest oil prices we've all seen for quite some time. In fact, ever, if you look at the US. What we've done is we've done it on a number of factors, three main factors. One is we've controlled our cost base, and you heard the GMD talking about that, the minister. Cost base is critical, so we're a low cost operator, and we've been driving down those costs. The other one is actually controlling the oil price by hedging. So we've got a forward hedging process or policy in place, and we forward hedge between 6 to 12 months, and that's given us thing. And then the last thing is obviously getting the team together to manage the liquidity carefully, to ensure that we adequately had enough liquidity to ride out any short-term dips. We've had that Q2. Luckily, we're now back into oil price recovery. The last thing is on the currency, and again, the last one is on the currency, the naira, and it's devaluing. Particularly for us, in terms of the money coming in, majority of it coming in is dollars. The money going out, the majority of that is actually in naira. So what we do is we have a dual currency. We mix and match to ensure that we are not exposed in any one currency. And we've, over the years, been largely successful in doing that. So a dual currency is critical with a dual cost base to match those two.
Thank you. So ladies and gentlemen, I'd like to bring this session to our end. Thank you for the enthusiasm in asking questions from Seplat. As I promised earlier, those questions will be answered if you send them in personally. I would like now to thank Austin again for the many, many years of being Seplat CEO. And this is a company you built by your sleepless nights. Congratulations for a very successful tenure. And Roger, congratulations for taking on the ship from here. The board has absolute confidence that you can take the company forward to all these changes in the global energy mix and all these sustainability environment we are talking about globally, and how Seplat plays in that environment and remain viable and a valid member of society and economic society in the future. Congratulations and thank you.
Thank you.
Austin, thank you very much.
Thank you very much. Ladies and gentlemen, I know it's virtually, but I think you will agree with our moderator, Mr. Miyi, that the outgoing CEO and the incoming CEO both deserve a round of applause and appreciation for driving a company like this even to the future. Thank you all very much. Yes. Okay, so we're switching gears now to our next panel session. And this time we'll be looking at financing. It is financing the energy sector in the African continent. That is the session we're going into. And can you talk financing without the Nigerian Stock Exchange? So I'm delighted to invite our next panel members for this session. First off, I begin with the Chief Executive Officer of the Nigerian Stock Exchange, Oscar N. Onyema, OON. Next, we have an academic scholar of the Said Business School, University of Oxford. Now, she also used to head the Security and Exchange Commission, Aroma Ote. And finally, amongst the panelists, we have the Chief Executive Officer and Managing Director, First EMP, who also is the chairman, Independent Petroleum Producers Group, Ademola Adeyemi Bero. This session will be moderated by the chairman, McKinsey Africa, Acha Leke. They're all joining us live via Zoom. Acha, I yield this virtual stage now to you.
Thank you very much. And let me join everybody in congratulating Seplat on its 10th anniversary. Hugely exciting, a milestone. I was looking up, only about a third of companies make it to the 10th anniversary. So congrats again, Seplat, for this big feat. We are running late, so I thought we'll actually go straight into the discussion. It's about financing, as was mentioned earlier, of the sector. We have an amazing group of panelists here with us. We are talking about this in a context where, as we celebrate this anniversary, we are celebrating it in the middle of, as we know, the COVID crisis. We woke up today to close to 900,000 cases across the continent, close to 19,000 deaths. Right, we're facing a global pandemic. Our supply chains are being disrupted. We're facing an African pandemic. We have a reduction in household expenditure, business expenditure. We're also facing in many countries like Nigeria another crisis, right? And so it's not an easy space to be in. And so let me start actually with you, Demola, right? Given that you're the operator here with us, talk to us a bit about financing the sector today. How easy is it? How challenging it is? What has been your experience financing your company, but also the sector?
Thank you very much, Acha. Just let me again just say thank you to Seplat for organizing this. Congratulations on your 10th anniversary. You're blazing the indigenous Nigerian independent sector as a leader. We all looked up to you guys. So thanks for blazing the trail. And to my two good friends, incoming and outgoing CEO, I wish you guys the very best. I think the context I would like to set for everyone is what's happened over the last 3 months. I think everyone calls it the new normal. But for the Nigeria industry, you've had the global impact of COVID-19. You've had the Nigeria impact. And I want to just highlight a few things there. We are seeing rampant community spread in Nigeria. We're seeing, they say the infection rate, we're not seeing the curve being suppressed. We're dependent as an industry that's 24/7, 365 days a year on being a global industry. We're connected to the globe. So when you see lockdowns locally and externally, it's impacting us. But I must also touch on the social economic dimension, which in a country with a population of Nigeria and the social dynamics, it's a key factor for us. And that has played majorly for us when you take COVID-19 within the Nigerian sector. But I also touch on two other elements. Oil price has fallen. I think some of us have not seen the depth it has fallen in such a long time. And I think, when you look at the cost impact on us, every operator now has to have a COVID mitigation plan. And that includes ensuring that you have a COVID-free environment to operate in. Like I said, we work 24/7, 365 days a year. So how do we keep those who are on our platforms, on our rigs, on our flow stations safe? And that's the whole area of isolation. So new dimensions that we've not thought about, new cost. But at the same time, we must bring the cost down. So this has had a major impact on us. I think one that I would also touch on is the impact on Nigeria. The financial systems, the monetary policies have been impacted. It's a country that's highly dependent on export of crude oil. So the dimensions on the impact on us has been huge. And I think when you say, so how are we managing, how are we raising finance? I would say, it's been challenging over the past few years. And I think what we just saw was with the COVID-19 over the last 2-3 months was a major escalation of the difficulty. But for First DMP, and I think for some of the local companies, we've seen our local banks, some of our Africa-focused financial institutions step up. I would say most of our internationals, most of the private equity funds have essentially just run for cover, just trying to understand what the dynamics will look like.
But we've seen our local banks, even with the limitations they have, step up. And we have a project we're bringing on stream in the next few weeks. We've invested circa $600–700 million on an offshore development. And we've seen our local banks and some of our Africa-focused banks step up to allow us to just get to foster. But in addition, I must also say for the joint venture, in spite of the challenges of liquidity or dollar liquidity, we've seen the national oil company continue to meet its obligations, meeting cash calls to the industry in spite of these challenges. So what I would summarize is we've seen the Nigerian financial system supporting, and that has been beneficial for us as we go forward.
Thank you, Demola. So a real step up in the local financing, right, to complement and offset a drop of international financing. Talk about local financing, I guess we need to talk to Oscar. Oscar, so how have the locally listed companies done on the stock exchange, and what's your outlook for the rest of the year, even into next year?
Thank you very much, Acha, and let me join everybody else in congratulating Seplat for doing so well in the last 10 years, and wish you many more years of successful operations. I must thank Chairman Ojako for inviting me to participate in the discussions today. Let me state upfront that many of the people that have already spoken today have painted a picture, double challenges, health due to COVID-19 and economic due to oil price shocks. And so if you look at companies that are listed on the exchange, particularly in the oil and gas sector, that index is down about 35% year to date yesterday. This is as compared to a decline of 8% in the NSE All Share Index. And if you were to put it in context, oil and gas indices in developed world have also fallen steeply this year. So for example, the Dow Jones US oil and gas index is down 39%. And FTSE 350 oil and gas index is down about 38%. So the global economy has struggled, and as you know, stock markets are forward predictors of economies. So if you bring it to Nigeria, it is no different. The Nigerian oil sector is one of the hardest hit sectors in the economy. The impact of the pandemic has led to a fall in global demand for oil, as well as oil prices. And our market is highly correlated to oil prices. Therefore, when you have weak oil prices, you would also experience weak markets in Nigeria. That notwithstanding, we've seen a number of significant capital raising activity in the oil sector. Just last week, we listed Acela Group 10 billion naira bond issuance, which was oversubscribed by about 24%. So it shows that investors, especially domestic investors, are willing to continue to put money into oil and gas if the returns are right. Finally, I should say that for the rest of the year, we think, given all the global projections, if you look at Nigeria, IMF is projecting that the economy will be down 5.4%. Given what my recent remarks, it's very clear that the oil and gas sector is going to continue to experience some pressure if that were to come through. So we think that about two things are probably going to drive in a significant way how oil and gas companies perform on the Nigerian Stock Exchange as we get to the end of the year. The first one is global pace of growth, especially in the US, Europe, and China. And then the second one is the intensity of the trade tensions between the US and China. Because Nigeria is so well plugged into the global markets, a number of those things are going to have significant impact on how companies perform towards the end of the year.
Thank you, Oscar. So very much, building on what Demola was telling us, it is challenging, but you can see, but it's not any different from what you've seen around the world, right? And you're seeing the local players step up from a financing perspective. Maybe then let's move to Aruma, because I think the question in this context, in this challenging context, is really what can players do to be more attractive from a capital markets perspective? What kind of stories should they be able to tell? What should they focus on? So Aruma, if you put back your capital markets hat on, what would be your recommendation to players who are looking to raise money now? What should they do to tell a compelling story to the capital markets?
I always wear my capital markets hat on because I think it's the answer to everything. Thank you, Archer, and let me join everyone else who's spoken before me to say this is an absolutely timely summit, and commendation to Seplat for its numerous achievements over the last 10 years, and I wish them even greater success going forward. I think it's important for me to also commend them for their dual listing on the Nigerian Stock Exchange and on the London Stock Exchange, because that was an absolutely important achievement. And I remember it fondly, having been Director General SEC 7 years ago. And they listed then subsequently 1 year later in 2014. I mentioned this because by listing on these two exchanges, they highlight to investors that they value sustainability, because the Nigerian Stock Exchange, the London Stock Exchange have been very keen to position themselves as homes of companies that value sustainability. I also think that they send a message to investors that they operate by the highest governance standards. And it was great to hear the incoming and the outgoing CEO talk about some of the things that they've done to make sure that they are the gold standard. And of course, the focus on transparency. Earlier, the point was made about there being a sustainability revolution. I think it was by Lord Malloch Brown. And I think that that will make you an investor darling and open up other financing options. So let me make 3 points. One, about the fact that the global context is key. The second, that the hydrocarbon business has a very important financing option, which has been talked about, but I do want to emphasize it. And I do want to make a point around innovation and the value of innovative finance. So for me, the global context, I think climate change has basically been at the center of the conversation. So in December 2015, the Paris Agreement, Nigeria, like most other countries, committed to working towards ensuring that global warming will be below 2 degrees centigrade. In 2018, in October 2018, climate scientists then advised that, we need to even be more aggressive, that we need to keep global warming below 1.5 degrees centigrade. Why am I making this point? I think that there is an opportunity in the midst of the challenges that everyone's describing. There is an opportunity with the shift to renewables. In an article, I think a few months ago, FT talked about the fact that investments today going to other energy sources is about $3 billion per year. And if we want to meet the 1.5 degree target, it will be probably about $2.5 trillion per year. So I consider Africa the renewable haven because of solar, wind, hydro, biomass, and even today you're seeing that renewables are still getting financed. I said the second point I wanted to make was to talk about what I thought was the most important financing option for the hydrocarbon sector. I call it basically optimizing your cash flow. You need to survive and you need to thrive. The Honorable Minister, and I think Oscar also made the point about oil prices tumbling, but there was also a supply shock, led by what happened between Russia and Saudi Arabia. I was glad to hear the GMD of the Nigerian National Petroleum Corporation start to talk about the fact that the cost base for the industry, that more work needs to be done to reduce the cost base. So my recommendation is rigorous cost cutting, but also rationalization of your asset portfolio. So try and divest non-performing assets, optimize your investments. If M&As and other financial structures can help you, then do that. And one thing that I haven't heard mentioned, which I'd like to touch on, is that we need to focus on what we do with fossil fuel subsidies around the world. The IMF, I think, suggests that it's still more than $5 trillion. And these investments can go to be deployed to education and health rather than spend them making this sector more inefficient. Let me end with innovative finance, because I think that's key. Yields are currently low around the world. Investors are looking for assets that are clean assets. They're looking for assets that focus on environment, social, and governance, and their governance compliant. I think that there are various innovative structures, and I will, in the interest of time, mention three. The first is that the multilateral development banks are being innovative about how they support the renewable sector. So one example that I absolutely admire is the African Investment Forum, the innovative platform that was established by the African Development Bank. And I think the Afri-Exim Bank is also a partner. But there was a project that they closed last year, which I thought was phenomenal. It was Mozambique's LNG project. The total cost, I think, is probably about around $25 billion. They had a funding gap of, I think, $750 million. They brought together the African Development Bank, the US Exim Bank, the UK Export Finance Bank, the Japan Bank for International Cooperation, Mizuho, MUFG, and an insurance company to try and provide an insurance wraparound. This will make Mozambique the world's third largest producer of LNG. And of course, they'll probably earn things in the order of about $50 billion. So the opportunity for Africa to think how they can leverage innovative finance is key. The second I want to make, and it wouldn't be me if I didn't make it, is around the value of green bonds. When the World Bank did its first green bond 12 years, the first plain vanilla green bond 12 years ago, none of us knew that it would become something where people will issue about $270 billion every year. And there's a variety of structures that people are thinking about today. People are even thinking like Enel in Italy is now moving towards a more sustainable development bond approach, which is another approach that the World Bank made popular. Finally, I want to talk about Aramco. I think Aramco is fascinating, and I'm always learning lessons from every financial structure. But you know, they recently announced that they will offer shares free to Saudi retail investors, and I thought maybe that's another way to look at how you transfer wealth, how you focus on inequalities. So I give these three examples in the interest of time just to say innovative finance is the way. The global context is paying attention to the global context is key, and you need to leverage finance to survive, thrive, or innovate. Thank you.
Thank you. Thank you for that, Aroma. You know, innovation, and we'll come back to, maybe let's actually go to Oscar to say, you know, are you seeing any of that innovation happening today in Nigeria in some of the financing options? Then I'd love to come to you, Demola, and talk a bit about energy transition. But Oscar, any sense on, you know, the innovation you're seeing in financing the sector?
Yeah, we're seeing quite a lot of innovation, some of it driven by digitization, some of it driven by some of the key issues that Aruma touched upon. So for example, there's been a strong shift towards sustainable financing globally. And what we see is that a lot of the institutional investors are looking to put money in companies that have strong sustainability credentials. So if you look at oil and gas companies that are taking a strong look at renewable energy in the long term, fund managers continue to latch onto that to give, fund managers that are, focused on sustainable investment themes tend to latch onto that. In Nigeria, we've rolled out green bonds. We've seen a number of corporates latch onto that to do both domestic and international green bond listings. We've also seen a lot of the domestic institutional investors come into the market in a strong way to support domestic listings. The last point I wanted to make is around ESG. So if you look at Premium Board Index, it's up 3.4% year to date. Seplat is on that index, and it shows that companies that have strong corporate governance credentials and ESG credentials tend to outperform the general market. I already gave you the stat that the general market is below 8%. Finally, the exchange has seen significant activity in the fintech space in the country. And so this is an area we think is going to continue to grow. And we think that with all the digitization that has happened in the last 3 months as a result of COVID-19, you just would see a lot more money pouring into that. And some of that would translate into investments in the oil and gas sector for fintech companies that are providing innovative ways to service that industry.
Yeah. Actually, Oscar, just on that point, there is a question that's come on the audience about how can the diaspora invest in the exchange, especially when it comes to oil and gas listings?
So the diaspora can invest in the exchange, in oil and gas companies through the exchange in two primary ways. The first one is through funds, either portfolio managers or the diaspora fund, for example. And then the second one is directly. At the exchange, we're a multi-asset class exchange. So we offer equities, fixed income, exchange traded funds, and other kinds of asset classes. And so they can come in directly using a broker and buying into those various asset classes. And that's the way they get exposure to oil and gas companies.
Yeah, thank you. Demal, let's come back to you because there's been a lot of talk about energy transition, right? And what the impact there is on financing of the sector, a number of players actually pulling out of financing fossil fuels. We'd love to hear your view on that. How is that affecting the sector in Nigeria? And what can operators like yourself do about it?
Well, thank you. When you hear energy transition, you hear climate change, you hear heading to carbon zero. I think one of the speakers earlier said, I think spending 60 billion in the UK in 1 year. I mean, so that's a different dimension. I'm very particular about thinking of energy transition, at least from an indigenous Nigerian E&P player who is looking to be sustainably growing for years ahead. I look at it in three main contexts, and I'd like to share my own thoughts around that. I think the first one is the whole ESG concept. And the second one is, what is the energy mix? And what is the energy mix that's particular for the country and the region? Because when you think of energy mix and energy transition, there's a global context, but you've also got to bring it back into your own environment and your region. I think the last one is, what do companies like ours need to do to be able to access financing? Local players are stepping up, but for the size of investments we're looking for, we also need to access the global and international funds. So what are we doing in that regard? So I'm going to touch on them very, very quickly. So ESG, environmental, social, and governance. I mean, one thing is clear, and I think, if we look at Seplat, those three things are important. And operating in the Niger Delta raises the game significantly for you because mistakes you make, errors you make, oversights will be very visible. Every financial institution, not just the international, but also the local ones, are using the ESG frame as a basis for identifying where to invest. So for us, it's environmentally friendly. You Your social relationships with your host communities, with those around you, very important. And your corporate governance, having the right board in place. And I'll just touch on two examples. So First TMP operates offshore. Yes, we're offshore, but we have a global MOU with 7 communities. We signed that MOU about 5 years ago, even before we came on stream. And we have an agenda we are following through, and we're meeting those agenda effectively. And it's not just about helping the communities, but it's also enabling them to be part of your operations and part of your wealth creation, being contractors to your business, looking at certain things that improves their own indices for growth. So ESG is a very important component. Having a board in place, I mean, First CMP, from the very first day we opened up shop, we've had a board in place, and we take governance very serious as we go forward. And that's one very important part for the whole energy transition. But let me talk about the mix. There's fossil fuels, there's renewables, there's nuclear, there's biomass. What that means for Europe, for the USA, may be different for Nigeria. Nigeria is a hydrocarbon resource entity. And whether we like it or not, the fossil fuel will continue to be a large part of our energy supply. But what do we need to do? We need to do it a lot cleaner than we've done. So zero flares, environmentally friendly. And there are two things I always say. When we are designing our assets and designing our wells, environmental compliance and cleanliness and safety must be in place from the very start. So process safety becomes a big, big part of what we do. Spending money on that at the outset is important. So my message around energy mix is, yes, renewables will come into play. You know, we will lessen biomass. Probably nuclear is not where we head in the short term, but fossil fuels will continue to be a large contribution, but we'll have to do it differently from what we've done in the past. We have to clean up our game. And lastly, you know, what do we do? I mean, how do we put ourselves? I'm just going to share 2 points and I'll close. Demonstrate execution capacity and that you can deliver as promised. What Seplat has done in the last 10 years is that it's built execution capacity in 10 years. It's delivered as promised, and it set itself a platform for growth into the future. All indigenous companies will need to follow this, copy this, but they must add 2 more factors to that. Competitive cost. GMD has talked about how some of us are high cost. How do we get cost into the right shape? And it's going to take 2 things. Things that the country needs to do to take out costs, which is structural, and how do we even take our own cost to a lower level and make sure our projects are bankable. So when I think of energy transition, the ESG links are very important. Understanding the energy mix for our own environment and making sure that fossil fuels is contributing in the right way. And lastly, you just make sure that your execution capacity and your delivery is right up there. Thank you.
No, thank you. Very clear. And actually, we are running out of time, but you answered the last question I was going to come to you because I want to ask the same question to all the panelists. I was going to ask, you know, we are here celebrating Seplat's 10th year anniversary. There are a number of people watching who are looking to be the next Seplat, right? So what recommendation do you have for them from a financing perspective? What I heard from you is ESG, make sure you have the right governance in place, execute well, and then make sure you manage your cost, right? We'd love to come to Oscar from a financing perspective. You know, what is your recommendation to the next Seplat around here? And then we'll end with Aruma.
My recommendation, in addition to all the foundation issues that have just been mentioned, is that you should keep an open mind with regards to your financing sources. As long as you have strong operations and strong governance, you're very likely to be able to access capital from the various verticals that exist in the country. And the capital market continues to be a very strong vertical from which you can raise capital, both domestically and internationally, and in different types of constructs. So just keep an open mind, approach it in a way that allows you to maximize the amount of money you can raise at the cheapest cost.
So different avenues to raising capital, keep an open mind to it, but don't forget about the capital markets, of course. Aruma.
I'd like to align myself with what both Demola and Oscar have said. At the end of the day, if you run an excellent company, investors will fall all over themselves to participate in that company. And therefore, your business model is important, your people are important. More importantly, we're seeing generational shift in those who are responsible for managing assets around the world. Over the next few years, the next generation is going to take over $32 trillion of assets. The millennial generation and Generation Z are very idealistic. And therefore, heading throughout your organization the importance of understanding how you execute versus environmental issues, how you execute versus social issues, and how you execute versus governance issues. And it is not a false choice. It is actually not a false choice, particularly for Africa. The opportunities are enormous. And finally, I'd like to say something I mentioned before. I mean, yields are low. I mean, look at how much both governments and central banks have pumped into make very good returns. So companies that position themselves well, domestic investors, international investors will be interested because people need to make money. Insurance companies they have an asset and liability, they need to make. So the best companies win. And really thank you, Archer, for the opportunity for us to talk about this. And of course, innovation, as I'd already said earlier. Thank you.
Awesome. Focus on building an excellent company, with the right people and with innovation. On that note, unfortunately, we had to keep it short. We're definitely way behind. So thank you very much. And huge thanks to my panelists. I'll now hand over to the moderator. Thanks again, and happy 10th anniversary, Seplat.
Thank you so much, Archer. Thank you also to all of your panel members. I can tell you from the studio here, you're getting a resounding applause from our leaders in the room. Thank you all very much. Now, it's important that I highlight this fact, as it was brought to my attention by our chairman, and that is the fact that Aruma Ote was the DG of the Security and Exchange Commission when Seplat went to the capital market, and Oscar, of course, was the CEO. And that brings me to our next speaker. You see, our next speaker, who is the chairman of the board of PJSE, Pose Agro, was also the chief executive of the London Stock Exchange when Seplat listed on the London Stock Exchange. Now, this makes it really exciting today. This tells you the kind of success that Seplat has gone ahead to achieve that has attracted the people who not only helped propel this success, but trusted and believed in the kind of leadership that the company was rising, up with. So switching gears to this, our next speaker, he will be talking to us in a concluding remark where he will be speaking to trends in global capital allocation to the oil and gas industry, COVID-19 and economic recovery. Please welcome with me to our virtual stage, a former chief executive of the London Stock Exchange, Xavier Relay. Xavier, you have the floor now.
Yes, thank you very much. Can you hear me?
Yes, we can hear you, Xavier. We can hear you.
Great. And greetings to all of you. Thank you for having me here with you today. I know we're running a bit late. I'll try to be concise, which is not my strongest quality. The US, where I am today, was once forecast to become not only the world's largest oil producer, but also its largest exporter, owing in particular to the fracking industry that actually hasn't returned positive financial returns since its inception. So how much the world has changed. The listing of Seplat on the London Stock Exchange, if I wear my old hat for a minute, was a seminal event. And I do want to congratulate Austin, Roger, at the time was CFO, but also its chairman, Bryant Orgiaco, for their vision. We certainly saw at the London Stock Exchange the amazing opportunity to do something new, to do a joint effort with the exchange in Nigeria, very ably led by Oscar today, to create something new in the world that is increasingly entangled. And let me, in terms of the subject for today's concluding comments, make 2 points, if I can leave them with you. The first one is, you don't need me to tell you how remarkable, in fact, extraordinary the times we're living in today are. But what is even more extraordinary to me is that there are things happening right under our eyes that will have most likely major repercussions in the future, which are going almost unnoticed. And specifically as regards the energy industry, this week, the cryostat was set at an international 35-nation program called the International Thermonuclear Experimental Reactors, ITER. A cryostat which will support a 16,000 cubic meter stainless steel ring that by 2025, when the assembly is complete, is expected to hold a plasma operating at a temperature of 150 million degrees Celsius, which is expected to produce 500 megawatts of electricity, whilst consuming through the reaction that I just mentioned in the plasma about 50 million megawatt. This is a major $25 billion program, possibly the largest multinational program today that will, if successful, and we'll know that by 2025, it's not very far away, deeply impact the global energy market. But it points to another thing, that those solutions, sustainable, renewable energy today produce less than 12% of global energy production. There perhaps may be some adjustment linked to COVID, but that's the big picture in a normalized environment. Those big programs and the fusion reactor, the ITER, will produce very little in terms of nuclear rejections. Through the fusion of very light atoms of deuterium, has access to almost unlimited combustible material and will have zero impact on carbon generation, except of course for the cost of building the plants. But these big programs, whether it's fusion, whether it's other sustainable energies, are going to require massive government investments. They are not for today. The advent of commercial fusion energy is not scheduled until at the very earliest 2035. And the flip side is the capital issue. And that's the second point I'd like to make before offering a conclusion. We saw something remarkable happening in 2019, last year. For the first time ever, whilst sustainable energy, ESG, had been discussed for many years, and I welcome the comment earlier that ESG is not just environmentally sustainable a model, but it's also governance and a range of other aspects having to do with companies considering their impact on society beyond just the generation of profits and the creation of economic wealth, which remains their main goal, their main mandate. But for the first time in 2019, we saw a major global shift running into almost $2 trillion of the global pension fund industry away from the generation of energy through fossil fuels, not just oil, gas, but in general, carbon generating sources of energy. And if you look at the global pension industry, these are World Bank statistics, by 2050, so 30 years away from now, the World Bank expects that the pension fund industry and the pension industry at large is going to run a global deficit of $400 trillion. That's about, again, pre-COVID, you must have seen the disastrous GDP numbers, quarterly GDP numbers in the US down almost 33%. But putting that aside for a moment, that's about 5 times the global wealth generated, the amount of global GDP, pre-COVID. So investors, pension funds, on the one hand, for the first time ever last year, took action to recalibrate their portfolios away from fossil fuels, essentially. And this created a situation where many of my friends in the investment management industry, particularly credit analysts, who looking at the energy industry, was telling me, we don't really know today what is going to be the cost of capital, what is the cost of capital, risk adjusted for the oil and gas industry. Really hard to compute owing to this withdrawal, substantial time withdrawal of capital. So we have an industry in general, pension fund industry, that has made the decision to at least start a significant divestment program, is facing massive deficits over the coming decades, to the point where pension deficits likely will become a far more important and central societal issues. We're seeing unrest, for example. The Gilets jaunes unrest in France was very much driven by the specter of pension reform. It's just one example. There are many others. But we live in a world where pre-COVID, 26% of global debt, sovereign as well as corporate, already had 0 or negative yields, and where the pension industry is unlikely to find the returns that it needs, particularly in an environment where the real economy is suffering, putting aside the outperformance of equity markets over the past couple of months in the recovery. So we're looking on the one hand at the energy sources of the future that will require prolonged and massive state investment on a global scale. And on the other hand, the pension fund industry, insurance as well, and endowments, et cetera, family offices, universities, who need returns, which they are unlikely to source from traditional fixed income and other sources of revenue generation. And that leads to me to the conclusion today that what we do need, certainly over the next 25 years or so, is a transition where I do believe that companies operating in the oil and gas and traditional fossil fuel energy who do have an effective CSR plan, who do care about the returns they give to their communities, who do have local plans of investment, including outside energy generation, and who are looking at all their stakeholders, effectively who stand out above the pack, as I think Seplat has shown as an example of what can be done, has shown great leadership. These companies, effective today and in the coming years, will see a return of investors because a transition is required. The numbers don't add up. And I know we all live today in an environment where globally the return of nationalism raises questions. We went down the path of extreme nationalism twice in the last century. We know the results. So there are definite fears, perhaps even anguish amongst investors and citizens around the world as to what the future global governance will be. But let me offer this concluding thought. We are at a period, I mentioned ITER earlier, which barely got any notice from the global press, even though it could have a major impact on a generation of energies in the second half of the century we live in. But we also are moving into, and technology, even outside the energy generation sector, is telling us technological innovation. We're moving into a quantum world. And this is not quantitative. What is a quantum world? It's the realization that the physics that underpin what we know of the universe are actually deeply entangled. The opposite of the segregation, the isolation, the nationalism that we are seeing today. To quote the scriptures, nation rising against nation and kingdom against kingdom. And what quantum computing, quantum communication has in store for us, because it is the very fabric of the universe if we analyze physics below the atomic level, if we go to subatomic particle level, is we are moving in a world where communications will likely, quantum physics tell us, at some point when we make it work, be instantaneous regardless of distance, where essentially financial networks, investments, and frankly, any networks that require the transmission of energy, solving for migration, security issues, as well as, of course, climate change, will be backed by technology that does not exist today, where quantum computing, pharmaceutical research is one example, for example, will offer us the power to compute at an output that we cannot even imagine today. Millions of sequences of innovation in a simultaneous fashion that will move forward in a tremendous fashion, tremendously improved fashion. The ability today that we have to produce drugs very quickly, to communicate instantaneously, and potentially even lead to technologies like tele and transportation, for example, teleportation. So we are in an environment where we do have to choose the kind of global governance we want. Are we going to recognize the nature, the entangled nature of the world we live in? Or are we going to go for isolationist, separatist type solutions which are unlikely to yield the solutions that we want? But what I do think, what I will conclude here today for all of you, and thank you again for inviting me, is that we are right at the edge of a period of deeply transformational and remarkable technologically driven transformation. And companies like Seplat in the oil and gas market, who will be smart enough to understand that living with that pace of technological change, I heard the word innovation before, which I think should be almost the first priority of any board in any industry around the world today. Companies like Seplat, who believe in innovation, who believe in their community, who have local strategies of return, they will see capital returning, even if they are positioned today in a sector that is deeply unloved by investors. It is a sector that the world will continue to need for many decades. And I will encourage all investors listening today to take a deep look at Seplat and companies like Seplat, who are based on a local strategy of returning wealth to their community, endorsing rules of improvement in the area of environmental sustainability through technological innovation. And the approach to innovation is critical. The world is scary that we live in today, but at the same time, the opportunities for deep transformational change are right there. Essentially, we're knocking at the door of an entangled quantum world. And I do believe that investors who need those returns, pension funds, insurance companies, endowments, universities, family offices, will recognize the opportunities for investment in the sector and in companies like Seplat. And I certainly do wish the company well for the future, and do wish all of you the very best. Thank you for listening to me today. I hope you've enjoyed this conference.
Thank you very much. Thank you, Xavier Rollet, KBE. Thank you, sir. Thank you so very much for your insights there. Okay, so distinguished ladies and gentlemen, wow. It's been the last 3-4 hours have really been it's been beyond engaging, if you ask me. What I love about events of this nature is you don't only highlight issues or challenges and leave them there. This conference has not only talked about some of those issues, but has also profiled solutions in many areas, especially for companies that are seeking to be like Seplat when we consider the marginal field bid round that is going on right now. Okay, so to bring this home for us, to drive this home for us, is the lady who led her team to deliver this very innovative conference. We've been talking about innovation and technology. This new era of the pandemic has delivered unto us a conference of this nature. And she has done very well with her team. They put up truly a stellar performance in delivering this exciting summit. For the vote of thanks, I'm now yielding this virtual stage to the General Manager, External Affairs and Communications here at Seplat, Dr. Chioma Nwachukwu.
Our special guests of honor, His Excellency, our distinguished speakers and moderators, Chairman of Seplat, Dr. ABC Ojako, our directors, our participants. I have the honor and privilege to be the one to propose the vote of thanks on this special occasion. I, on behalf of Seplat, wish to thank everybody for coming for this very rewarding summit. We thank the Minister for taking out time to attend and to declare the summit open. And for our speakers, we thank you for your invaluable contributions. We thank you for your time. We thank you for your efforts. We thank you for your commitment. And for our moderators, you did very well, drawing out the best from the speakers. We thank you and we're grateful for your contributions. For my directors, who particularly gave us the guidance and who were very interested in making sure that this summit is a success, we thank you, and for even being speakers in this conference today. We thank you very much. We thank all our participants from all over the world. We hope you did find the summit rewarding. For us in Seplat, we believe that value adding is important. And for us, this summit is one way to add value. It is one way to bring up the discussion around issues concerning the continent. It is one way to have the voice on the table. It is one way to add to the narrative. We hope and do hope that by next year, we'll bring back this summit, and we pray that you will all be here to share a Seplat Summit for 2021. Thank you for coming and be safe. Thank you. See you next year.
And indeed, be safe. Thank you so much, GM. Your Excellencies, very distinguished ladies and gentlemen. Not many companies set out and 10 years after have been able to achieve their vision and mission and are pressing toward the mark of indeed excelling beyond expectations and even the visions of the founding fathers. Seplat has become such a company and truly is now a bride for many investors. Many of our speakers have told us. So be a Seplat. I'm sure you have benefited so much from this summit today, and you're willing to take those learnings to heart and become a future Seplat in our country, a country that needs more value addition, adding companies than we have today. And Seplat has produced a lot of leaders, I'm sure, from today's summit, because I am confident you have benefited immensely from this. Thank you all very much. My name is Richmond Osuji. In God sparing our lives, I'll see you in 2021. Arrivederci.